Jumps in late US trading after its cloud unit as This is the steel price, believe it or not, from the title, but this is steel up by 2%, and that's just reflecting we have copper higher, steel higher in the Asia session, all of that to do with Chinese stimulus. Will some of that flow London's way? Nasdaq futures are down by 0.6%, and actually that's been deteriorating over the last half hour or so, just a little, but we do have a sort of mixed story coming out of the tech sector when it comes to numbers from Alphabet and Microsoft, but the market landing on the downside on that mixed picture, and Brent crude at 87.58. Let's have a look at the futures picture for you as we take in that Brent crude price just a little weaker, still watching, of course, developments in the Middle East. And this is the DAX picture, fairly flat, futures flat on London, a little weaker, though, on the French market, down by 0.4%. So let's see how the start of the European trading day, how that performs, how it takes us through into the rest of the morning. So the FTSE 100 fairly flat this morning. The dollar not catching much of a bid. Oil prices, as we just noted, fairly constrained after a few days of weakness on the oil price. And here you see that Brent crude down by 0.6%. So another day of weakness, actually, I think we should say. Brent crude and WTI both down by around 0.6% as we continue to watch the Middle East for any signs that things are becoming broader in terms of that conflict that is taking place there. The Italian FTSE MIB down by 0.3%, then the Spanish IBEX down by 0.25%. The FTSE MIB fairly flat, sorry, the FTSE 100 fairly flat, perhaps flattered a little by what we're seeing on some of those resource stories, even if we are seeing oil prices a little bit weaker this morning. Let's roll on and have a look at that sector picture for you and see if we've got some of the basic resource businesses responding to what we see over in Asia. Yes, we do. We see mining stocks up by 0.75%, food and drink up by 1/3%, but energy stocks going down with the oil price, as I've said, some weakness coming through there over recent days, down 0.4% on that particular sector. Just casting my eye across the others in terms of the movers. No standout movers, perhaps, but basic resources, perhaps the one most worthy of note to the upside following those measures out of China. Let's get to some of the main macro themes then that we're thinking about as we're trading today. Sam Unstead joins us from the Markets Today blog. And interesting market moves then around basic resources and oil prices. Oil prices coming down, that's weighing on energy names. Some of the steel and copper moves, though, through the Asia session, lifting some of the companies related to the mining sector then, Sam.
Yeah, I think that's right, Anna. I think what we're seeing this morning is one of these days when markets appear to be kind of taking stock. There's lots of kind of mixed pieces of news. So, yes, the iron ore price rose on this China stimulus. Mining stocks actually rallied into the close yesterday when some of these measures were announced. But then you also have, as you mentioned as well, big tech earnings have just started. There's still more of those to go, and they were very mixed. Two completely separate stories really on Microsoft and Alphabet. So I think at the moment it appears that traders are kind of trying to take into account all of these moving parts, and it may well be a kind of day when it struggles for direction a little bit.
Yes, exactly, and certainly some of the negativity then expected to play out in France. We don't have the opening for the CAC 40 just yet, taking some time to come through, but Kering is negative, and that's on the back of the numbers coming through from that particularly luxury goods company a day after we got a more positive story from Hermès. So I suppose they were set up for negativity in the French market. We'll see if that comes to pass. But the China stimulus measures are really interesting, aren't they? Because, again, I mean, our guest earlier describing them as once more just piecemeal.
Yeah, and I think that appears again to be the situation. So, yes, there was a move yesterday, a bit of a rally into the close. Worth noting as well that miners, the basic resources on Stock 600 is still the worst performing sector of the year, so there's plenty of space for that to rise on measures like that. But then this morning we've had the Country Garden story. That seems to have punctured that narrative just a little bit. And so, as I say, I think we're going to end up with a day when things are struggling for direction and trying to work out, are these measures, as we've said on this program many times, are these measures that berserk bazooka everyone is looking for, it doesn't appear that people think so.
Yeah, one former PBOC official describing how these could be substantial. Big impact was the wording used, but not necessarily seeing that yet. I suppose you have to combine what we've seen out of China, the Country Garden latest, and combine that with what we're hearing out of Hong Kong as well, where we are seeing some policy initiatives around the property sector.
Yeah, the property sector and the stocks trading sector, I think, again, to try to kind of boost the financial hub, the attractiveness of Hong Kong as a financial hub again. But actually, again, it appears that we're getting a very similar reaction. So particularly the stamp duty measures don't appear to have filtered too much into stocks this morning, and a lot of analysts saying there's a kind of muted reaction and don't see a huge impact from those. So actually, in the end, very similar to what we're seeing in China. Big moves with big announcements that are not necessarily filtering through in the way that is desired.
Okay, Sam, thanks very much. Thanks for the update. Sam Unstead joining us from the Markets Today blog. You can find that blog by going to the front page of the Bloomberg UK website. You can click through to the blog from there, or you can type TLIV Go onto the Bloomberg terminal. You'll find the blog there as well. Coming up, we will take a look at your stocks on the move, including Heineken climbing in the early part of today's session, despite reporting a drop in beer volumes. More on that stock next. This is Bloomberg.
The younger generations are more, of course, pay more attention to sustainability, and so they are looking at brands that are greener. But you have to make sure you're authentic because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why part of the big transformation of our R&I, where there's this €1 billion we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
From New York City,
from London, in Sydney,
from Washington,
in Tokyo,
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
here's what I'm watching.
You do not want to miss this
Is
story.
there the kind of upside?
This is Markets Today. We are 7 minutes into the European trading day, and the picture looks broadly negative. The CAC 40 falling, the luxury sector getting a reminder of the hard times from Caring overnight. Let's get an update on the individual stock moves. Joe Easton joins us once again with a briefing. Joe.
So Deutsche Bank off to the races this morning, up around 5%. Now, the initial headlines looked weak. They missed on their trading profit, but they have set aside more capital than expected by analysts. As I said earlier, we did speak to the CFO and they discussed their revenue outlooks. Let's have another listen to a bit more of that interview with Deutsche Bank now.
We've been more and more confident as the year's gone by, firstly in the net interest income outlook, as you've seen with the rate environment and also better than sort of modeled expectations on pass-throughs. our deposit books in the corporate bank and the private bank are performing extremely well. We think that's actually something that will persist for a little bit longer. But at the same time, the businesses have been building momentum even as the market environment's been a little bit unsettled. So we're pleased with the progress so far this year, Danny.
I mean, NIMs being able to stay as they are for longer, that'll surprise many. How much longer do you think net interest income can hold up, given some people have started to talk about the benefits of higher rates starting to wane?
Well, look, I'd say on a long-term basis, the benefits of higher rates will be with us into sort of 25 and beyond. This is not yet, I would say, a fully normalized rate environment for banks. What is viewed to be somewhat temporary is this, what we call deposit beta effect, or the pass-through of interest rate increases to clients. And the industry has outperformed its expectations, recognizing that we've come from a period of very low rates for a very long time. Now, that may still persist for a time. It reflects, if you like, the competitive environment that we're in and the value that our clients see of the relationships and the services that banks are providing.
So that was the Deutsche Bank CFO speaking to Bloomberg earlier. As I say, that stock having a good day now, up around 4.5%, outperforming given some of those negative headlines that we saw earlier. In the UK, we've had Lloyds as well. Now, we saw Barclays slumping as much as 10% yesterday following some weak net interest margin guidance. We've seen that from Lloyds as well, lowering it as UK savers look for higher rates of interest. Meanwhile, over in Spain now, Santander was a bit of a positive one in terms of their numbers, but as we said in Stocks to Watch, those stocks up around 20% already year to date, so potentially just taking some profits in terms of some investors there. But we spoke to Santander's CFO earlier as well, so let's have a listen to that interview now.
We have delivered another very strong set of results, adding 9 million customers in the first 9 months of the year, growing revenue at double digits and improving efficiency as a result of our transformation program. We have earned 2.9 billion in the quarter, 8.1 in the first 9 months of the year. Both are record figures for Santander. This is equivalent to a return on tangible equity of 14.8%. We've grown TNAV plus dividend per share at 12% in the first 9 months of the year, while we have strengthened our capital to 12.3%. So very good set of results. Basically, the key variable that explains these results is our diversification. We have very good performance in Europe, improving profitability in all countries, and we are starting to see the benefits of lower rates in Latin America.
Well, they certainly are very crucial numbers. And before I want to kind of move on to the different pieces of your business, I want to ask you first about your loan loss provisions, because to me, those were actually a little bit higher than the market was expecting. An estimate about 3.1 billion, we'll call it, where you actually reported about 3.3 billion in loan loss provisions. How much of that is a result of the macroeconomic take out of Santander?
We expected, we had guided the market for a cost of risk to below 1.2%. We are at 1.13 in September, so we are very much in line, actually better than our estimates for the year. We think we will end better than this 1.2% by December. Obviously, we have some normalization of the cost of risk in some economies as interest rates go up, but we are starting to see actually much better performance, and the outlook is improving in countries where interest rates are coming down, like in Brazil. So overall, I think we are very pleased with our asset quality evolution. The key variable to estimate future asset quality is the strength of the labor markets. And labor markets are very, very strong in all the economies where we operate. So we don't see deterioration in asset quality in the coming quarters.
So that was the Santander CFO speaking earlier today. As I say, that stock down around 0.8%, perhaps a little bit surprising given the headline numbers beating estimates, but the loan loss provision, as discussed with Kriti just now, potentially was weighing on that stock this morning. Now, another one we brought up in financials is Worldline. Now, a big sales miss for that one, but not got a price. I'm told that that one is halted, so we'll keep an eye on that one in France. And then speaking of French stocks, a big decliner is Kering, the owner of Gucci, reporting a 7% sales drop in those numbers in the last quarter. Now, analysts are expecting 6%, so that does seem to be hitting that stock. One of the worst large cap firms we've got out today, down 4%. ASOS, meanwhile, after the close of trading yesterday, they announced that they would not release their financial results this morning as scheduled. They say their auditor needs to look into their results again, potentially causing some concern for that one. We're seeing it decline at around 2%. As you know, I'm more of an ASOS man than I am a Gucci. But in terms of Reckitt, we are seeing that one dropping as well. Now, Reckitt, a bit of weakness in the infant formula business, according to analysts. There was a big shortage of that in the US a couple of years ago, but that's now eased. Reckitt returning around £1 billion worth of cash to shareholders today, but that's not enough to lift the stock, and that one falling 2%. Now, Berestorff, on the final board, we're giving me Heineken gaining 3%. They were expected by some to cut their guidance due to higher beer prices weighing on volumes. We haven't seen that, so that's seen as a positive. That one jumping. Kuehne Nagel over in shipping, $30 billion shipping company in Switzerland, slipping after some weakness in shipping rates, according to them this morning. A couple of others. We've got RWE at the moment on my screen. I'm seeing that one up 1.4%. Got a new contract over in New York for renewable energies. ASMI, just running through these last ones here. ASMI is a chip maker, up 9%. A bit of health in the chip sector. We're going to now flip to Uniper. I'm told in my ear, I think that one is having a massive move. Uniper up 10%. There we go. Over in Germany. This is the renewable and also general utility firm over in Germany. Had a bit of a government exit recently, selling down the stake. Today giving good sales guidance, and that one rising 10% on the DAX index.
Yeah, it seems hedging paying off at Uniper. Joe, thank you very much. Joe Easton from our equities team with the full story around the banking sector this morning, and plenty of other movers and sectors in focus. Luxury weighing, it seems, on Paris. Let's get to the stories in markets this morning with Rupert Thompson, chief economist at the Kingswood Group, who joins us this morning. Rupert, nice to have you with us. Let me start with, it's a sort of a mixed morning. You find us in the middle of earnings season. There's plenty of geopolitical risk to talk about, but we also have China once again coming forward with some piecemeal steps to try and support the Chinese economy. Do you see reasons for hope that we've bottomed on the Chinese conversation when you look at the global economy, Rupert?
I agree with your analysis that it is very much it's a continuation of the piecemeal stimulus measures we've really been seeing for a number of months. It's not the bazooka that some people were looking for, but it is further moves in the right direction. And certainly we think, pessimism on the Chinese economy did get overdone. And you have started to see actually the growth numbers, activity numbers start to improve in the last few months. So, only last week we had growth surprise on the upside, growth running at an annualized pace of over 5% in the third quarter. So it's not as bad as the market is pricing in. And these kind of piecemeal stimulus measures will help. So, we think the worst is over.
Okay, and Rupert, what do you expect for the US economy? Because the conversation of this year has been about how the US economy has just been much more resilient than we would have anticipated at the start of this year. What kind of landing, if at all, do you foresee for the US economy?
Well, that is the big question for markets, which is still, to be perfectly honest, completely unresolved. And we get third quarter growth numbers out later this week, which are probably going to see a 4% plus number, which is in a way crazy, given the Fed has jacked up rates by 5% over the last year. But I mean, our view is, in a way, very simple. It's that you're not going to get inflation back down to the kind of levels the Fed wants to see without a significant slowdown or possibly a mild recession. And if you look at most of the leading indicators, rather than the likes of employment or current growth rates, all the leading indicators are basically still saying we're headed towards some kind of recession. So we're sticking with the view that you are going to see some kind of mild recession over the coming year.
Okay, so recession delayed, perhaps. Rupert, what do you make of the resilience of the U.S. economy in the face of all of those rate hikes? A lot of focus on the transmission mechanisms through the U.S. economy, and you know, for reasons we well understand, it takes a very long time for the housing market to be sort of materially affected, or the consumer through that particular transmission. But we are seeing the pain in manufacturing, and yet the U.S. economy as a whole is resilient. How do you think we explain this resilience?
Well, as you're sort of hinting at, it has been the big surprise how resilient the economy has been. And I think what people are coming around to view is actually people sort of underestimated the extent to which the excess savings built up by the consumer during the pandemic would support the consumer. They also overestimated the hit to the housing sector, which would come from the rising rates. And as you've just been saying, the housing sector in the States, because everyone's on a sort of 30-year fixed, is not actually that sensitive to the rising rates. And then I think at the back of your mind, you've got to bear in mind that, as everyone sort of admits, the impact of monetary policy is long and variable. So, trying to pinpoint it down and saying it's going to hit this month rather than next month, or the next 3 months rather than 6 months, is very, very difficult. And you've got the whole sort of pandemic overlaid on top of it. So, sure, it's held up better than expected, but it's too early to say we're out of the woods.
And what does that do to fixed income, Rupert? We've talked a lot this year about how that strong picture for the US economy has been one of the drivers that has meant a sell-off in bonds and higher yields. Higher for longer seems to be the conversation that has dominated. But now we heard this week from Bill Gross and Bill Ackman both saying that dynamic is over. Do you think so?
I mean, we agree with them that actually bond yields have finally, famous last words, finally reached a level where you think they shouldn't go any higher. And in a way, this is predicated on the view that actually, even though the economy is remaining stronger than anyone expected, as we just talked about, the Fed will not actually raise rates. Maybe it'll raise 25 basis points more at most, but you basically are now at or close to the peak in rates. And if that's the case, and if the Fed does start to ease rates within the next year or so, because you do get this significant slowdown, that means bond yields should be starting to fall back. Short term, you could get an overshoot, the other way. But on a sort of 6 to 12 month view, you've got to think bond yields are going to be higher rather than lower if the Fed is starting to ease.
And in terms of the earnings story, Rupert, what's at stake for the tech sector this week? I'm looking at NASDAQ futures down 0.7%, E-minis down 0.5% as we head towards the start of US trade. We've had a sort of mixed story given to us on the cloud side by the likes of Alphabet and Microsoft overnight, but we've yet to learn a lot from the tech sector, which is, of course, such a big part of the earnings story in the US.
No, you're entirely right. I mean, if you look at the kind of earnings growth which is expected for the big seven this quarter, earnings are expected to be up to 30% plus. And I think sort of what yesterday's results highlighted in a way that it's not just the magnificent seven against the rest versus the rest. You've actually got sort of intense competition between the two. So as well, the cloud business of Microsoft did very well, whereas it disappointed in Alphabet. But I think it's absolutely critical whether the big seven do continue to produce the earnings growth the market's expecting. And I think really, again, the big test there is if we do get this slowdown, we do get a mild recession, do these companies prove to be as resilient as the market now seems to be assuming? And our guess is actually they probably won't be.
Okay, Rupert, thanks so much. Thanks for joining us. Rupert Thompson, Chief Economist at the Kingsgood Group. Thank you for your time. Coming up on the programme, we'll focus on luxury. Once again, Kering falls after reporting some not-so-Gucci results. We'll discuss the outlook for the sector next. This is Bloomberg.
That's me, Max. What's up? How are you? I have been writing about Wall Street for almost 15 years. And what that means is I write about feuds and rage and rises and falls and comebacks And every now and then, I also write about a couple of villains. Thank you so much. And now, I am about to do something new and very, very scary. We are making a show, and it's based on Bloomberg Businessweek magazine. So what is this show about? It's a show about money, power, culture, pop business. We're gonna ask complicated and profound people about their ideas, their careers, their lives, their risks, their failures, their imagination.
It's so incredibly liberating not to care what other people think.
I was giving my tools to other communities. I wanted to bring those tools home.
Tune in. Like, please, like, really actually tune in. I desperately need an audience.
This is Daybreak Europe. I'm Kriti Gupta. Let's get to the stories that set your agenda.
Taking you from the U.S. market's close.
A lot of this was priced into the U.S. session.
To the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Welcome back to Bloomberg Markets today. Shares in Kering have slipped in Paris trading on the back of weaker third-quarter sales for its Gucci brand and beyond. Andrea Felsted from Bloomberg Opinion, who covers the consumer goods sector, the luxury space, joins us this morning. Andrea, nice to speak to you. So, Kering, a number of areas of disappointment. What were they?
Well, Gucci obviously is in transition from its bold maximalism to a sleeker look. Will that catch fire with customers? We don't know yet. But the other surprise was how weak the other houses were. So Saint Laurent, that saw its sales down, its third quarter sales down 12%. Now, some of that's due to trying to take the brand up market and cutting back on where it's sold. But it's also the fact that it was very popular with these aspirational customers, and they're the ones that are cutting back.
And that seems to be the defining factor then, this earnings season, for the luxury businesses that do well and those that do badly, because the likes of Hermes doing well, but that's a different price point.
Exactly. It all depends on where your customers are. So these aspirational customers, particularly in the US, hit by interest rate rises, lack of stimulus a couple of years ago, they are cutting back, whereas the super wealthy so far are insulated. We saw that with Hermes, Bruno Cucinelli still doing very well, that they haven't yet been impacted by what's going on in the markets. And LVMH said that they tend to be more affected by shocks, so a sort of a real estate shock, a stock market shock, rather than movements in the everyday economy.
Okay, Andrea, thank you very much. Thanks for the update. Andrea Felsted joining us there from the consumer goods, with the consumer goods view from Bloomberg Opinion. Good to get the focus on the luxury space once again. A very different story to yesterday. Yesterday was all about Hermes and the resilience of that super wealthy consumer. Coming up on the program, we'll dive into the tech story in a bit more detail. After Microsoft and Alphabet report, we'll take a closer look at big tech earnings and find out from Matt Bloxham his take. He was telling us earlier that he thought actually Microsoft just a little ahead of Alphabet on some of the key trends that we're seeing in AI. That would be something that we continue to watch then. With tech in mind, NASDAQ futures are deteriorating the closer we get to the start of US trade. NASDAQ futures now down by 0.9%. E-minis down 0.6%. So it's tech and broader weighing on sentiment into the US start of trade. More on the markets next. This is Bloomberg.
From a mining company, which frankly is dirty, it's big, now you want to reposition the company into green energy powerhouse. Are you a walking contradiction, or what did you learn along the way?
Well, in the early days, it was considered completely impossible for anyone. Doesn't matter if you're a huge company, like back then it was Anglo-American tried to break into the iron ore industry, and they spectacularly failed, even though that back then they were the largest mining company in the world. Now, for an upstart, a tiny little company with next to no cash at bank, no ground, no anything, for them to announce that they were going to break into the iron ore industry, the global seaborne iron industry, probably the most protected, viciously protected resources industry in the world, and then take them on head on, it was just considered impossible. It was just like a fairy tale. However, we stuck to the plan. We always tested each other by making sure that we were starting where we wanted to finish, which is as a major iron ore producer. And then we took all the steps back. We calculated what the steps would be, even though some of them seemed impossible. Now we have a strategy, and we've got to go flesh that strategy out and pursue it with single-minded focus.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point.
What is the lesson or the observation?
This is Bloomberg. This is Bloomberg Markets today. 30 minutes into your European trading day, here are your top stories. Country Garden defaults. The Chinese property developer fails to pay some dollar bonds for the first time ever. Beijing looks to offset negative sentiment by ramping up support of its markets. Deutsche Bank soars as the lender vows to accelerate payouts to shareholders amid weaker trading results. Plus, a tale of two clouds. Microsoft jumps in late US trading after its cloud unit Azure picks up steam, but rival Alphabet sinks as its offering lags. We will get more details on the tech sector shortly. For the moment, let's check out where we are on European equity markets. Then we're down by a 0.25% is the overall picture. Stocks Europe 600 down by around that much. The DAX doing a little better than the rest. The FTSE down 0.2. Actually, it's the CAC 40 where we are seeing some weakness, but that ties into the conversation we've already had this morning around the consumer. The wealthy consumer doing pretty well still, but the aspirational consumer not quite so much, and that's weighing on the likes of the Gucci brand, Yves Saint Laurent over at Kering. So that's a weight on the French market. We might see some of that showing up in the consumer products sector as we look at the sector breakdown. Another dynamic we've been looking at overnight has been the strength of some of the basic resource materials themselves over through the Asia session, and that had been pushing up some of the mining stocks earlier on. We are going to get the sector picture shortly, I'm assured. We have been seeing that lifting. There we are. Basic resources was an early gainer, but actually that's fading a little bit. Perhaps we think we've known for quite a while, and in fact some of those measures out of China were announced at the back end of yesterday's European trading day. So basic resources were gaining more than this. Now they're up by just 0.1%, and in fact things seem to be deteriorating as we go through the session just a little. Here's the CAC 40 down by 0.4%. Travel and leisure now down by more than 1%. Retail also under pressure, and consumer goods and services also feeling some weakness, as I say, in the luxury space. Let's deal with the technology theme, though. Alphabet shares fell after Google Cloud missed growth estimates. The unit reported operating income of $266 million, far from the $434 million forecast from analysts. It was a different story, though, over at Microsoft, with shares bouncing after posting its strongest sales increase in 6 quarters. Here with some details, Matt Bloxham from Bloomberg Intelligence. Matt, let's start then with the Microsoft story. Deep dive into Microsoft for us. Tell us what we learned there.
Yeah, well, that's right. Well, you mentioned Azure, which is the big part of their cloud business, which actually accelerated growth up to 28% year-on-year constant currency from 27% last quarter. So that was kind of a really strong improvement. And we saw a really big jump in profitability, both across their cloud businesses and overall for the business, a 5 percentage point improvement in operating margin from Microsoft. So kind of firing on all cylinders. I think that's a reflection of the fact that they're ahead of the game on AI, which is really kind of coming through across their product range and driving that cloud business. And I think people were surprised about the margin improvement because all of this AI processing is expected to be quite processing intensive and therefore costly, so that the margin and the revenue growth are surprised there for Microsoft.
Okay, so ahead on AI and not feeling necessarily the cost impact that many had expected. What did we see then from Alphabet? Because we're telling a story of contrasting fortunes for tech.
That's right. So Google's business on cloud is about a third of the size of Microsoft. So and they're the kind of the number 3 challenger. So you expect them to be growing faster. But we saw in kind of this quarter was that their cloud growth slowed. So they did 28% growth last quarter, about 22% this quarter. So a big slowdown, and also, as you mentioned just now, less profitability. So it's not making much money anyway, and that's been a frustration for investors the last few quarters. It moved into a profit territory a couple of quarters back. People were expecting a sequential growth this quarter, and it reversed. So I think, weaker growth and the cost picture more problematic for them.
Okay, let's leave it there on that conversation. Matt, thank you very much. Matt Bloxham from Bloomberg Intelligence. Let's focus still, though, on the tech sector. A warning today on artificial intelligence from Martin Weiss, managing partner and global co-lead for AI at Infosys Consulting. He says the UK has about 3 years to come up with rules to reassure people about artificial intelligence before the country sees the risk of social unrest by disgruntled workers. His warning comes ahead of Prime Minister Rishi Sunak's AI summit that takes place next week, which will see the UK host global leaders from the sector and global political leaders as well. AI is also a subject of discussion over in Riyadh. Bloomberg's Francine Lacroix sat down with the UK Deputy Prime Minister on the sidelines of the Future Investment Initiative conference.
There are clearly hostile states who are evident in this space. There's also unregulated environments, and we can see that, for example, in relation to cyber and what we see in, say, Russia or North Korea. But it's not just deep fakes. It's also about the proliferating effect of AI. So what AI can do is to enable a far greater range of people to do things that previously were only done by a nation state. If you think about the proverbial kid in their bedroom, their ability to enhance their hacking skills through AI, or even the ability to generate biological weapons, we need to guard against those kind of risks. And that's the kind of thing we'll be focusing on at this summit.
But some have asked, for example, the UK to have a lighter touch regulation when it comes to AI. Would you be one of those? And how would that work in practice?
Well, I don't think this is really primarily about the UK alone. This is about how we work with other like-minded countries around the world. So I was addressing the United Nations a few weeks ago at the General Assembly, met with many different countries from around the world, had meetings at the White House in Washington. There is a general desire and appetite to make sure we understand this risk and figure out what to do about it. Because remember, if you think back to that letter that was written by those frontier AI companies, I've never known a time when the regulated go to the regulator and say, can you help us guard against this risk? And some of them described it as an existential risk. So it's about building an international framework to do that.
The UK Deputy Prime Minister Oliver Dowden there speaking to Bloomberg's Francine Lacroix in Riyadh yesterday. The AI theme, no doubt, will feature heavily as we head towards that UK AI summit. Coming up on the programme, we will dive back into the China story, though. Country Garden defaulting on a dollar bond for the first time ever. We've had confirmation of that now. We look at what it means for the developer and China's property debt crisis. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader. Yes. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Top names at the Fed are on Bloomberg.
The economy is handling much higher rates, at least for now, without difficulty. So notionally, that might tell you that the neutral rate has risen, or it may just tell you that we haven't had rates high enough for long enough.
The bond market has tightened quite considerably. If financial conditions are sufficiently tight, our work is not necessary because we don't need to boost them more.
Nobody covers the Fed like Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything.
This is Bloomberg Markets today. 40 minutes or so into the European trading day, a softness across European stocks, certainly over in Paris. The luxury sector under pressure after those results from Gucci at Kering. Overall, then, we're also seeing sentiment towards US stocks fading a little, down by 0.8% now on Nasdaq futures, post some big names reporting in the tech sector. Let's focus on China, though. Chinese developer Country Garden has been deemed to be in default on a dollar bond for the first time ever. The company was once China's largest builder, of course, but now its debt crisis is shaking the wider property market and is weighing on the country's economic growth. Joining us now from Hong Kong is Bloomberg's Rebecca Chung-Wilkins with details of this and the wider China story this morning. Rebecca, let's start with Country Garden then. What difference does this make? I mean, we've had confirmation of something that we've seen coming for a very long time, but I suppose it's worth marking the first time that we've seen this kind of default from Country Garden.
Yes, exactly. The first time we've had this sort of official language of a default with bondholders receiving this notice from the trustee of event of a default. Now, if we have bondholders representing 25% of that outstanding note demanding that the trustee, on behalf of them, then can ask for the bond, the principal and the interest to be due. So this is important because it's a bit like sort of the firing gun for offshore investors when it comes to default. So other offshore investors will be really looking to see whether, for example, there's a risk of cross-default being triggered across their notes as well. And we already know that offshore creditors have been trying to get organized in terms of thinking about ad hoc groups to represent themselves in a potential restructuring. So this is sort of that official escalation, if you like. And more broadly for Country Garden, you know, there will be persistent questions over what the future is for all of these unfinished projects. Country Garden has 3,000 projects, mainly across smaller cities. It's already let go of about 70,000 employees, but it still has about 60,000. So it's a really big employer. The scale and the consequences across China are really quite significant.
Okay, so we continue to watch to see if there is a read across from this story and this development around Country Garden to other developers then, Rebecca. Now, the housing sector is one of the areas of the economy that the Chinese authorities have been trying to boost with various policy initiatives. That's not the focus of the last 24 hours. We've had other policy initiatives coming through, specifically around sovereign debt levels and deficit levels in China. What difference can these latest moves make?
Well, in some ways, these rare adjustments that we've seen, this push to produce stimulus, for example, are in part to offset some of that weakness that we've had in Country Garden and the property sector more broadly. So we've had this rare mid-year revision now confirmed for the budget, essentially allowing for about 1 trillion yuan in sovereign bonds to try and boost. It's a bit of a sort of Goldilocks number, according to economists, not too big, but not too small. And we've also had this very rare visit by President Xi Jinping and other senior policymakers policymakers to China's central bank. There's a first known visit by President Xi to the PBOC, really underscoring how the economy is absolutely the focus for Beijing, and also, I think, acknowledging this policy shift, really acknowledging the very little tolerance for any kind of sharp slowdown in economic growth.
Okay, and this comes at an important time for Chinese markets, Rebecca. We've seen the CSI 300, for example, wiping out all of its gains that it achieved post the pandemic reopening. So that's something that perhaps policymakers are mindful of in China. And as you mentioned, this move we've seen in debt levels and deficits really quite notable. I think we had to go back to 2008, the last time that we saw a mid-year adjustment from Chinese authorities.
Yes, although there is a sort of slight distinction here to be made. Back in 2008, the adjustment that we saw really was to allow this sort of this quote-unquote bazooka stimulus, sort of several percentage points worth of its GDP in debt allowed to sort of offset the consequences of the global financial crisis. The amount of stimulus that we've seen this time is much smaller than that, relatively speaking. And so we do still see, on the one hand, this desire to support the economy, but on the other hand, we're not seeing a sort of shift in the model of growth. We are still being quite conservative, or Beijing appears to be still quite conservative about how much debt it's going to allow to run through this system to manage this slowdown in growth. So not a sort of significant shift in the MO here, I think.
Rebecca, thank you. Bloomberg's Rebecca Chung-Wilkins in Hong Kong with the latest on those China stories. Let's get to some of the top read stories on the Bloomberg terminal this morning. House Republicans have nominated Mike Johnson of Louisiana as their latest choice for Speaker, one of Donald Trump's most outspoken allies in his efforts to overturn the 2020 presidential election. Johnson, who is the party's fourth Speaker nominee in 3 weeks, said he is very confident he will be elected Speaker. A vote is planned at noon in Washington. Li Shangfu has become China's shortest-serving defense minister ever, ending months of speculation over his status. According to state media, the nation's top legislative body removed the U.S.-sanctioned general from his role without explanation after just 7 months in the job. Xi has now abruptly removed 2 newly appointed ministers since embarking on his precedent-defying third term in office last year. Visa's quarterly profit beat Wall Street estimates as consumer card spending climbs. The world's biggest payments network also announced a new $25 billion stock repurchase plan. The earnings suggest U.S. consumers remaining resilient amid geopolitical upheaval, stubborn inflation, and the threat of a recession. Uniper shares soared this morning after raising its full-year profit estimate. The company said hedging activities tied to its power generation and natural gas pipeline businesses played a significant role in the positive results. The bullish forecast comes a year after the government bailed Uniper out with one of the biggest rescue packages in German corporate history. California and a group of more than 30 states is suing Meta over claims that its social media platforms, Instagram and Facebook, have fed young people harmful content to boost profits. Meta says it's offering more resources to support users and that the lawsuits improperly seek to regulate content. Onto the banking sector, and Deutsche Bank has soared this morning as the German lender said it plans to accelerate payouts to shareholders. That's after higher income from its corporate bank and deposit inflows offset weaker trading results in the third quarter. Let's unpack the numbers then. Bloomberg's Charlie Wells joins us this morning. Charlie, deep dive into Deutsche Bank for us. What are we expecting? What do we see there?
Yeah, well, quite a bump, I would say. And this really kind of contrasts with the story that we've seen about European bank stocks this year. I mean, they have been so unloved. There has been so much concern about volatility and uncertainty. There's been concern about investment banking advisory. And really what we saw in these third quarter earnings from Deutsche was kind of a spin on that story. So we're seeing this bump in the share price. We saw actually their investment banking advisory fees beat expectations. We did see trading not necessarily perform as well as expected, but what we've been hearing from the CFO as he's been communicating the earnings this morning has been this sort of tone of confidence, a sense that the bank may be able to buy back shares, which investors seem to be really liking, that expenses seem to be a real big focus for this bank, and also revenue guidance. It seems like the bank is going to be able to keep that momentum going for the rest of this year.
Yes, scope to increase investor payouts was the wording, I think, being used by management. Let's pivot to the conversation around Santander. We got numbers coming through from the business. Interesting to listen to the narrative being told there. The relationship between higher interest rates and net interest margin sounds kind of simple, isn't always. What did we hear from from Santander?
Yeah, I mean, we kind of get this global picture. It seems like they beat expectations on net interest. It seems like we're still, at least with this bank, kind of in that era of higher interest rates, of how banks actually tend to be profiting from this. I mean, so much so that some governments have turned a skeptical eye towards them. One government in particular, Spain, the government there has been wondering why Santander has not been passing on some of the profits that it's been getting from its higher rates to consumers. So that could be a potential challenge. But Santander is in a really interesting moment. I think one focus that the bank has really had recently has been on investment banking in the United States. The chairwoman has been talking about, hiring hundreds of staff there as they try to boost up their presence there, and poaching in particular from Credit Suisse.
Okay, that is interesting, isn't it? Where the alumni of Credit Suisse end up, we will watch with interest. Lloyd's Banking Group reporting numbers this morning, and a day after Barclays, the focus was really going to be on the net interest margin and the profitability of the underlying lending business in the UK.
And it wasn't so bad. I think, in a lot of ways, Lloyd's is lucky that it followed Barclays. But it's interesting. I mean, Lloyd's is the largest mortgage lender here in the UK, and the indication that we seem to be getting is that the UK consumer, at least as a customer of Lloyd's, is holding up fairly well. So that margin did not go down as much as some may have feared, and it seems to be an indication that there's still demand for mortgages, even though what's unique about the UK is that it has these shorter-term mortgages, and there was some concern that there'd be a little bit of upheaval as those mortgages come due, or the deals need to change, and Lloyd seems to be performing fairly well, at least in that regard.
Yeah, at least for their customers, as you point out, that section of the UK consumer. Charlie, thank you very much. Bloomberg's Charlie Wells giving us a summary of all of the news flow out of the banking sector this morning. Coming up, we will look at the main macro movers in markets, including reaction to China's stimulus package. More on that next. This is Bloomberg.
watching and says, I want to be Ari Emanuel when I grow up, what should somebody do to get into the talent agency business or the business you're in?
Well, it's hopefully what I've taught my kids. You got to be intellectually curious. You got to be, you got to show up. And you know this like I know this. I got on a lot of planes. You just, even though that voice in your head is saying, oh God, I'm so tired, I don't want to do this. You got to show up. You got to be charmingly relentless. You have to build emotional endurance because there's no straight line to success. It's kind of all over the place, and you have to just be able to work through those things. And then I think one of the things that I do every week is I try to create serendipity.
The top names in global leadership are on Bloomberg.
The conflict between the U.S. and China has escalated so much. This is one of my greatest fears, that a small nation is forced to choose sides.
Bloomberg. Context changes everything. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg. Top experts. Great questions. Earnings season is here.
Tons going on, lots of earnings.
Beat wherever you look.
Bloomberg breaks the numbers first.
It's a tale of two earnings. Results from Goldman Sachs, Bank of America, and Morgan Stanley.
Netflix is out, guys.
With exclusive expert analysis.
Recovery is underway.
They crushed it. It was one of their best quarters ever.
This is a story all about pricing power.
We're going to make more money. We're going to make more money. And we're going to make more money. We're making bank. And I think that is what we can take away.
Bloomberg Television and Radio. Context changes everything.
This is Markets Today. We are 53 minutes, let's call it, into our European trading day, and European sentiment being weighed down by the luxury goods sector. A day after we saw a positive story out of Paris, today looks a little different, down by 0.7% on the French market. Let's tell you what is coming up today, things we're looking for on the agenda. This morning at 9 a.m. UK time, we get the October reading from the German IFO survey. Plus, we'll be speaking to the IFO president, Clemens Fist, that conversation a little later. Then at 3 p.m. UK time, we will get a rate decision from the Bank of Canada. Bloomberg Intelligence says the downside surprise in September headline CPI will not be enough to sway the bank from holding a higher for longer rate posture. We're also watching on the agenda today the US Treasury, which will sell $52 billion worth of 5-year notes. Interesting in the context of concerns around issuance and debt levels. On the earnings front, some notable firms reporting stateside: Boeing and tech names Meta and IBM. So a continued focus on tech after we saw a couple of big tech names reporting after hours yesterday. Let's talk about what's happening in these markets. Noor Al-Ali joins us from the Markets Live team. Let's have a quick word on China then, Noor, because that is something I mentioned just before the break. It's been something you can see that has had some positive impact on some mining related stories, I suppose, in Asia and into Europe as well.
Yeah, absolutely. And the question here is the tide turning for China. You have that positive momentum potentially. You've seen that in stocks. They have rebounded. They have come down. That rally that we've seen earlier after the very positive news and the support that you're seeing from the Chinese government trying to support its government. But at the same time, you do have Country Garden and all these property sector woes that are still weighing on investor sentiment. The question here is whether or not those efforts are enough to convince and sway those foreign investors to invest again or come back to the Chinese markets.
Okay, and a nice reminder of some of the stories. Well, an economy that is closely linked, of course, to China is Australia. And a nice reminder that perhaps the inflation stories we've been talking about in developed markets, we're not done with all of them, are we? We got some inflation data out of Australia that looked pretty hot this morning.
Yeah, absolutely. And what you see is quite interesting about today's data is that normally you'd see that read across markets. You'd see bond yields rising. We don't see that today. We see that potentially, you know, the CPI story out of Australia has finally now taken that note of potentially it's an isolated event that's more relevant to Australia. Now there's debate of whether or not, you know, the RBA will hold rates at its meeting next week when they meet. You know, I know that the odds have gone higher, but, you know, and we've had recent comments just yesterday from the RBA's new governor saying, you know, if this influences our view, our outlook on inflation, then we'll definitely, you know, raise rates. But we'll see whether or not this data print will be enough to sway that view on inflation outlook.
Yeah, so it is moving Australian assets, but as you say, not much read across into other geographies, which is interesting in itself. The ECB is on the agenda for tomorrow. Your thoughts ahead of that then, Noor?
Absolutely, right? We had PMIs really point to a very gloomy picture out of the economy. You know, we're pretty much in somewhat of a recessionary environment in the whole of the euro area, particularly Germany, with the manufacturing figures there. You know, you have supply conditions waning, you have tightening financial conditions and credit supply. So while the market is looking for a pause out of the ECB tomorrow, you know, that inflation figure is quite high still. So potentially gearing for a hawkish pause, and that's very much a balancing act. Now, we know that Lagarde is speaking later today, but they are in a quiet period, so we may not get steer on what they've decided up until the meeting tomorrow.
Okay, and we'll have the IFO numbers out, that survey of German business expectation, that coming shortly. Noor, thank you. Noor Al-Ali from the Markets Live team. MLIV Go is the function to use on the Bloomberg terminal to get more insights from that team. That is it for Markets Today.
think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
The top names in global leadership are on Bloomberg.
Right from the start, I decided to open our border and to take in millions of refugees from Ukraine. We believed, and we still believe, that it is necessary, and we try to serve as neighbors should do.
If we want peace, if we want a negotiated outcome, strengthen Ukraine on the battlefield, because that's the only way to convince Putin that he will not win on the battlefield.
Nobody covers the top global leaders like Bloomberg Television and Radio. Context changes everything.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Danny Berger in London, in for Francine. Here's what's coming up on today's program. The U.S. President and Saudi Crown Prince discuss ways to prevent the Israel-Hamas war from escalating. It comes as Israel's ambassador demands the UN Secretary General resign for comments he made about the Hamas attack on October 7th. It's a mixed report card for big tech. Microsoft beats, Alphabet disappoints in the biggest week for U.S. earnings. Over in Europe, Deutsche Bank shares jump after it promises more payouts. And Spain's largest lender, Santander, beats estimates. We'll have more from our conversation with both CFOs later this hour. And Country Garden defaults. The Chinese property developer fails to pay some dollar bonds for its first time ever. Beijing looks to offset negative sentiment by ramping up support of its markets. Now we're getting data coming in. Let me walk you through it while we take a look at what these European markets are doing. They are soggy, but the Business Confidence Index, the IFO survey, is coming in slightly stronger than expected. 86.9 is where it hits. The estimate had been for 86 flat. That's also an improvement from the previous reading we had. Current Assessment Index, that is at 89.2. Again, another beat. The estimate was for 88.5. Expectations Index, so this is of course what businesses see coming forward, 84.7. The estimate there was for 83.5. We've also had the euro area money supply, M3 money supply, coming in, falling less than expected, 1.2% year over year. The estimate had been for nearly 2%. Here's the kicker. Loans to households and loans to companies have risen, not by a lot, but they have risen year over year, 0.8% and 0.2%. respectively. The last time we got these figures, it was the weakest in terms of loans, in terms of credit conditions since the euro area crisis. In fact, it was worse than that. Taking a quick look at the euro, it does seem to be picking up, ever so slightly. You can see that slight bounce thanks to stronger data from the IFO survey and from the credit impulse. We were trading higher and then lower, and now slightly higher, but we're pretty much unchanged at this moment. Part of the reason we started off the morning so strong was thanks to some of the China news coming out. SocGen says still not a bazooka, but important signals coming from China and significant inform. That is fiscal support. That is on the way. That was announced from President Xi Jinping. He also stopped by the PBOC, a very rare move from the Chinese president. So that had been supporting the euro earlier this morning. Still see some of that. More calm when it comes to this bond market. We are looking at yields ticking up for your 10-year about 2 basis points. Yesterday on the front end, that's where we got this ping pong. It seems every day we are getting that. Yesterday for the front end of the curve, it was stronger U.S. PMIs. That contrasted with weaker PMIs coming out of Europe. Those were in contraction. In the U.S., it was in expansion. When it comes to Europe, we've had a lot of earnings. Deutsche Bank, we'll have my conversation with the CFO later throughout the programming. They're able to extract more capital, hopes of more shareholder returns, and HS Tech. This is really when you see the strength coming from those China moves. Hong Kong Tech overlooking that official default from Country Garden. We knew it was coming. Perhaps that's why it's not shaking markets up too much at this point. But there you go. It's official. They've skipped out on a dollar bond payment, defaulting on that one specific instrument. Let's see if we have some of the big tech up, because it's also been a big week, been a big day yesterday for the big tech companies. As tech goes, maybe so does the rest of the market. I'm looking for a read right now on the NASDAQ futures. Those are lower by 0.7%. It is Alphabet really weighing on those. It's interesting to see how these two companies, based on the same segment, have had very different fortunes. When it comes to Alphabet, it was weakness in their cloud. Here's the issue. If we are going to start to see waning when it comes to their search business, more competition on things like not just search, their ad business too, cloud needs to pick that up. It didn't happen, but for Microsoft, it did. Those shares are up more than 3%. All right, let's get back into the European data. Again, just to reiterate here, stronger IFO business confidence coming in at 86.9 for this IFO index. The estimate had been for 86. Let's now get to Clemens Fuss, the president of IFO Institute, joins me now. Clemens, great to see you. Look, this is another set of results that were better than expectations. Last time you said the figures are neither falling apart nor stabilizing. Are we finally seeing stabilization?
Good morning. Yes, what we see here does suggest that we see a certain stabilization. To some extent, that's in line with forecasts. So the German economy will be shrinking this year, but for the final quarter, we do expect a stabilization, slight growth, and what we see now in this data is compatible with that. So it's maybe not yet a complete turnaround, but certainly stabilization.
When do we see that turnaround? What does this tell us, the sentiment you're seeing about when Germany can return to healthy growth?
What we're seeing at the moment is that the positive numbers are mostly coming from the service sector. So it's sectors like IT, but also tourism. People are spending their money on tourism. That's maybe because they haven't been able to travel during the pandemic and still like to travel. In manufacturing, the current situation, the business situation has still become a little worse. And what companies see is fewer incoming orders. Other sectors like construction are also quite bad still, so there's not much change there, but the services are stabilizing the economy.
I caught up with James von Moltke, the CFO of Deutsche Bank, earlier this morning, Clemens, and we talked about the geopolitical uncertainty, the open-ended nature of another front of war opening, this time in the Middle East, and that was causing concern and a pause and a rethink in boardrooms. Are you seeing that to any degree of the filtering, again, of this geopolitical uncertainty turning into paralysis for companies?
We do not see very much impact of current events in the Middle East, and that's because the oil price hasn't moved much. Things would be different, or might be different, if there was, if Iran became involved in the conflict, or Hezbollah. But up to now, we don't see much. Israel as an economy as such is not so important for the German economy. Exports to Israel are 7 billion, and the region as a whole is not so important. But of course, there is general geopolitical uncertainty, and that adds to concerns about trade with countries like China. So it's not a good development, but it doesn't yet affect the German economy as a whole very much.
And China's economy certainly has. It has been languishing. We've had pieces and pieces of different support. Xi Jinping offering more fiscal support today, something that markets have been waiting for. Some of that extra support, is any of that becoming apparent in things like demand, for example, at German factories?
Not yet. We don't see that yet. So manufacturing companies see their orders declining. But of course, if this fiscal support in China had an impact on demand in China, this will also stabilize the situation in Germany. But I think we are not there yet. It's maybe a hope for next year.
Yeah, so, okay, a couple of signs here potentially pointing to stabilization. I do then wonder what all this portends for the ECB. They have a decision tomorrow. Most expect them to hold. Do you see a little bit more wiggle room, perhaps, for them to raise rates if necessary? Again, given at least for Germany, stabilization.
I think that would be premature. My feeling is that the ECB should stop and wait before doing more. Currently, markets are even expecting a decline in interest rate next year, and we do expect, and this is another stabilizing factor, we do expect inflation to go down. We see import prices going down, so I think the ECB will and should pause, and there might even be room for interest rate cuts next year, maybe in the second half of next year. But I certainly wouldn't advise the ECB to raise rate. I think the current data is not enough for that.
So Clemens, is it fair to say, I mean, this decision tomorrow, it's not a pause, it's the end? It's the end of the hiking cycle?
I think it's certainly a pause and very likely the end of the hiking cycle. At least that's what the current data says. We do expect declining inflation next year. It will be between 2% and 3% in the Eurozone. And so I see little reasons for more hiking at the moment in Europe. I think in the US, the situation is different. But at the moment, I would think that we've probably seen the end of the hiking cycle, yes.
Okay. Clemens, thank you very much for joining us this morning. Clemens Foyst there, the president of the IFO Institute, after stronger than expected numbers, stabilization and services, and as Mr. Foyst says, perhaps the end of the hiking cycle. Okay, coming up on the program, we're going to bring you the latest on the Israel-Hamas conflict and the unfolding humanitarian crisis as President Biden and Saudi Arabia's Crown Prince bin Salman discuss ways to stop the war from escalating. That's next on Bloomberg.
The younger generations are more, of course, pay more attention to sustainability, and so they are looking at brands that are greener. But you have to make sure you're authentic because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why, part of the big transformation of our RNI, where there's this €1 billion we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
Markets are on the move.
The focus, of course, is on Ukraine.
The market is so hyped up about AI.
Unless we see dramatic changes, it's just going to keep getting hotter.
The
heard the market analysis. We're going to go get straight to some breaking news. We'll have a full roundup.
Going through some of the numbers and what investors should make of them.
We have so many important conversations. Let's check in what you need to know.
So much going on in the world, in geopolitics, in the wars that we are seeing, and what just happened recently in Israel and Gaza. At the end of the day, when you put all this together, I think the impact on economic development is even more serious, because I feel like the world economy, while everything looks better than we expected it to look in the developed world some time ago, I think we're at a very dangerous juncture in where it could go. Secondly, from my own perspective at the World Bank, I think there is a growing divergence between the developing economies and the developed world. I'm quite concerned about the gap that's originating between the global south and the global north. These are things that, President Ruto is sitting here. He will speak to you in great eloquence about that, but it worries me enormously.
And we talked briefly about the cost of money, but when you look at the biggest risk, is it geopolitics for the world economy?
Oh, right now? Yes, but risks tend to move around. I'd be very careful of fixating on one and ignoring the others. Right now, that is true. But I would say, if you listen when Yasser was speaking, he was talking about a very different economy, where interest rates are probably going to stay a little higher for longer. If you would believe that today, the US 10-year Treasury just crossed 5% briefly yesterday. This is areas we haven't seen. So yes, that is right there lurking in the shadows.
From yield volatility to uncertainty on global politics, a lot to have overall in a conversation at FII. That was the World Bank President Ajay Banga speaking with Bloomberg's Francine Lacqua. Now, at the same time, the Israeli ambassador to the United Nations has demanded that Secretary General Antonio Guterres resign for comments he made about the Hamas attack on October 7th. Let's bring in Bloomberg's Oliver Crook in Tel Aviv. Oliver, what is at the heart of this row?
Right, and Danny, as the war continues here in Gaza and in Israel, the war of words and the sort of political debate has sort of migrated, and it was in the halls of the United Nations where the Secretary General, Antonio Guterres, was pointing to Israel's action and saying that there were clear violations of international humanitarian law. And I'll quote him here just to make sure we get everything correct, but he's saying that the grievances of the Palestinian people cannot justify the appalling attacks by Hamas, and those appalling attacks cannot justify the collective punishments of the Palestinian people. He also said, and this was the part that the Israelis took issue with, it is important to also recognize that the attacks did not happen in a vacuum. He also said that the Palestinians have been subject to 56 years of suffocating occupation. The Israelis did not take this well at all. The foreign minister of Israel canceled a meeting with Guterres. The UN ambassador called for his resignation and also said that they prove conclusively those comments beyond any doubt that the Secretary General completely disconnected from the reality in our region. He was saying that he expressed basically an understanding for terrorism and murder. And again, the Israeli perspective on this is that they are waging a war with Hamas, who they say disguises themselves within civilian populations, that the Israelis are doing what they can to avoid civilian casualties. All of this being said, the count that we are hearing from within Gaza has now exceeded 5,000 people dead, maybe closer to 6,000. And this is going to ignite this conversation about the limits of self-defense. Self-defense, something that most of the world has affirmed Israel has the right to do, but how expansive and in what mode? And this is going to be sort of the question and the conversation that's going on globally, and different people are going to have different answers. In the Arab world, the perception is that it has already gone beyond that. The United States even has said that the mode of how Israel goes about it, though, has been obviously still very publicly supportive of Israel.
It's certainly complicated. Oliver, thank you very much. That is Bloomberg's Oliver Crook in Tel Aviv. Now, coming up, we dive into the markets. We'll be talking with Sylvia Ardania, head of economic research at Barclays. That's next on Bloomberg.
That's me, Max. What's up? I have been writing about Wall Street for almost 15 years. And what that means is I write about feuds and rage and rises and falls and comebacks. And every now and then, I also write about a couple of villains. Thank you so much. And now, I am about to do something new and very, very scary. We are making a show, and it's based on Bloomberg Businessweek magazine. So what is this show about? It's a show about money, power, culture, pop business. We're gonna ask complicated and profound people about their ideas, their careers, their lives, their risks, their failures, their imagination.
It's so incredibly liberating not to care what other people think.
I was giving my tools to other communities. I wanted to bring those tools home.
Tune in. Like, please, like, really actually tune in. I desperately need an audience.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Now, this past Friday, the Europe Eco team over at Barclays really laid out in a note to clients the problem, the issue, the dilemma that the ECB will face tomorrow. In their note, led by Sylvia Ardagna there, saying that our outlook of economic stagnation and continued disinflationary progress risks looking too benign. High-frequency indicators on real activity point to a high probability of a recession. Let's get to the woman behind the report. It is Sylvia Ardagna, head of European economics research at Barclays. So, Sylvia, you wrote this note last Friday. Since then, we've had Europe PMIs soggy in many areas, maybe to put it lightly. Does this reinforce a conviction, perhaps, that we're headed towards recession?
Hello, good morning. Yes, indeed. We got the PMIs that reinforced our conviction. We saw that the service sector in Germany is getting weaker, and in particularly the PMIs implied that the periphery is much weaker than we were first thinking about looking at these high-frequency indicators. We also got the BLS data, and we saw that both credit demand and credit supplies continues to indicate tighter lending conditions. And this morning, just a few minutes ago, we also got the September credit data from the ECB, which again showed that on an annual basis, the growth rate in lending to non-financial corporates and to households is also continuing to decrease. So all in all, we had data that reinforced our conviction. On the other side, we got the IFO index, a bit of better expectations from Germany from surveys, but overall the balance.
Yeah, Sylvia, I wanted to go there because it confused me a bit, if I'm being honest. If you have PMIs in Germany specifically for services looking weak, but at the same time, IFO comes in stronger. I was just talking to the president at the institute over there who said that there was stabilization in sentiment for German services. What do you make of that disconnect?
Well, it's not the first time we have seen that there has been a disconnect throughout this survey data after, COVID. Even when you look at the European Commission data, it's never too easy. I think maybe what's happening is that, the samples are obviously not overlapping, not the same. We got, in Germany, the PMIs in the manufacturing sector also showed a little bit of an improvement from very low levels. So stabilization is good. It's not getting worse. But Germany was already on a very weak, I would say, path. So we are stabilizing at a low level. What's more worrisome for the euro area is that we start seeing some weakness stronger than we thought in other countries.
was other thing that stuck out to me, Sylvia, in that quote from your research I just wrote, that the continued disinflationary progress risks looking too benign. We heard from Christine Lagarde yesterday. According to people familiar, she said the risks were balanced. The fight against inflation is going well. Is that a little too benign on her part of a characterization of how the fight against inflation is going?
No, we're really benchmarking the fight against inflation against our own forecast, which is much more dovish than the ECB wants. We think that core inflation and headline inflation will get back to 2% sooner than the ECB forecasts. And that's because we have a much weaker economic activity forecast. So we were just noting, based on the September print, that relative to our own benign view that inflation gets to 2%, 2-3 quarters ahead of what the ECB thinks, perhaps we have been a bit too optimistic.
Okay, I see what you're saying. I wonder if in light of that, then, how much conviction we can have around whether the ECB, largely expected to hold tomorrow, whether they're at the end of the rate hiking cycle.
We have conviction on that. Obviously, the future is uncertain. There is obviously a possibility that more hikes can come if we have the activity and inflation outlook wrong. But under this current conditions, we really think that the monetary tightening is being transmitted quite forcefully, and we have not yet seen the peak of it. So as we progress through time, rates at these high restrictive levels will continue to bite on activity and will, in our view, have an impact on core inflation, which will allow the ECB to stop hiking rates.
Okay. Sylvia, thank you very much for joining us this morning. We appreciate your time. Sylvia Ardagna, Head of European Economics Research at Barclays, on the eve of an ECB rate decision. And some of those better survey figures coming from EFO are doing their work to lift the euro only slightly, but we did erase a decline. Okay, coming up, Deutsche Bank shares are up after it said it plans to ramp up payouts to shareholders. We're going to take a closer look at their results and how rivals in the sector are faring. We also had Santander results as well, not as a warm reception by markets. All of that coming up. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He caught himself self-made day trader. Yes. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
In many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
This This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
The U.S. President and Saudi Crown Prince discuss ways to prevent the Israel-Hamas war from escalating. That comes as Israel's ambassador demands the UN Secretary General resign for comments he made about the Hamas attacks on October 7th. It's a mixed report card for big tech. Microsoft beats, Alphabet disappoints. It's also the biggest week for U.S. earnings. Here in Europe, Deutsche Bank shares jump after it promises more payouts, and Spain's largest lender, Santander, beats estimates. We'll have more from our conversations with the CFOs in the next few minutes. Country Garden defaults. The Chinese property developer fails to pay some dollar bonds for the first time ever. Beijing looks to offset negative sentiment by ramping up support of its markets. Good morning and welcome to The Pulse. I'm Danny Berger in London. Let's get straight into these earnings. We have Deutsche Bank shares. They are trading higher after the company vowed more payouts as higher rates fuel growth. I caught up with the CFO, James von Moltke, earlier, who said the benefits of those higher rates, they are here to stay.
Will be with us into sort of 25 and beyond. You know, this is not yet, I would say, a fully normalized rate environment for banks. What is viewed to be somewhat temporary is this, what we call deposit beta effect, or the pass-through of interest rate increases to clients. And the industry has outperformed its expectations, recognizing that we've come from a period of very low rates for a very long time. Now, that may still persist for a time. It reflects, if you like, the competitive environment that we're in and the value that our clients see of the relationships and the services that banks are providing. And for now, that's persisted. We think that that can persist for the balance of the year. Our deposit revenues were actually on an underlying basis in both deposit books essentially flat over the course of the second to third quarter. So we're pleased with the ongoing development there.
So you've also had an additional 3 billion euros in capital release. That's more than expected, of course, by 2025. How much of that eventually gets returned to shareholders?
Look, it's too early to say, but just to go back to the point, at 13.9% CET1, Common Equity Tier 1, we've significantly outperformed our expectations on capital. And that puts us in a completely different place from where we have been for a while, building capital for regulatory inflation. Now I think we can look to a capital distribution path with a lot more confidence. As we're saying today, we think we can both accelerate and expand on that capital distribution path that we laid out to shareholders, which was 8 billion in respect of the years 21 to 25. We think there's upside to that over time, but it's too early to say how much and how soon.
Okay, fair enough on that, James. You also have 2% higher on additional costs. Not that unusual for what we're seeing in this inflationary environment. You did already announce cuts earlier this year. Are more coming?
Yes, more coming. We're going to continue to work with discipline on the cost base. We've laid out to investors a goal to run the company essentially flat for a considerable period of time. And what that means is that we're working sort of every day on cost reduction measures, which at the very least should offset the impact of inflation and also allow us to invest in the businesses with our own resources.
James von Moltke there, the Deutsche Bank CFO, speaking to me earlier. Joining now to dive into the bank earnings, it's Bloomberg's Jan-Henrik Forster. Jan, there had been this expectation, okay, maybe deposit betas stay low this quarter, but at some point, it's got to bite. At some point, the benefit from higher rates is going to run out. There you have von Moltke saying, sticking with us, 2025 and beyond. Is that surprising?
It is not surprising given where the rate cycle is in the Eurozone. It's very different to what we're seeing in the UK. So Barclays has a very high deposit beta, which basically suggests that clients are a bit more, I guess, rational with their savings and deposits. They are switching. And probably it also suggests that kind of competition is a bit higher. For Deutsche Bank, and I can't speak for the world right now, but I feel like there's a lot of room for optimism here in bank earnings for European banks and also for Deutsche Bank specifically.
Right, and this 3 billion in euros they're releasing.
They are releasing 3 billion in euros, and that's on the capital side or RWA side. But I feel like what von Moltke made clear is like, look, we are still making money on maturity transformation, i.e., we are still making money on higher rates. And also, he said, look, there's room for improvement in lending. So that's actually a good sign. That's bread and butter business. Deutsche Bank is very focused on its house bank strategy, serving to global corporates. And here, there seems to be room for further margin improvements on higher rates. So that's a positive. Overall, I would also say that all divisions are basically in more or less in line with estimates, and the bank is profitable, and it's kind of on track to reach targets. I think the market was also very focused on costs, and they are in line with the run rate and with guidance. I think on Deutsche, that was basically the key outstanding question.
Yeah.
Are they on top of costs? And they delivered that.
I mean, very, very low drama earnings. Maybe you could argue Santander was the same. I don't know, but we did speak to the CFO there too. Let's quickly take a listen to what he had to say.
We have delivered another very strong set of results, adding 9 million customers in the first 9 months of the year, growing revenue at double digits and improving efficiency as a result of our transformation program. We have earned 2.9 billion in the quarter, 8.1 in the first 9 months of the year. Both are record figures for Santander.
Okay, I'm going to be a little mean here because I want to show the share price right after we hear from the CFO saying it's a record quarter. I mean, shares are barely up not even 0.5%. I'm looking, KBW says there's no change in narrative with this earnings season.
I think this narrative is false, basically. Look at Deutsche Bank. Earnings are good. I don't want to dispute that. But it's coming from a low valuation, right? There's a lot of catch-up. And return on equity is low. Yeah, it's 7%. Santander posted 15%. So that tells you really the story. I think the market is missing something. And Deutsche needs to show how they want to get above 10%. Capital markets need to come back. I would argue Santander is a little less reliant on capital markets. Yes, they are growing the investment bank now. Let's see how that goes. That's a lot of cost. But they are making, they have a much more global franchise, and they are also making money on rates. So I feel like Santander's results were not overly impressive, but returns are really good.
Okay, so a mix there.
And that's why I invest in banks, because I want to see them manage their total assets well.
Yeah.
And Santander
well, you
seems to be doing
quite
that.
literally invest because you report on banks, so their future is in some ways your future too.
I'm just being empathetic here.
I love it. Jan, thank you so much for joining us as always. That's Jan-Henrik Forster of our banking team here in Europe. All right, let's talk about some other earnings. Tech earnings, they hit the tape yesterday. Both Microsoft and Alphabet shares are having quite the different split in fortunes. Pre-market, Alphabet is dropping after missing cloud estimates. Growth there. Microsoft, however, it posted its strongest sales increase in 6 quarters. Let's get over to Bloomberg Intelligence Matt Bloxham, who joins us for more. I mean, you couldn't have 2 different results when it comes to the cloud, or at least 2 different types of reception. Let's start with the Azure business from Microsoft. What was leading the strength for them in the cloud?
Yeah, that's right. So Azure, the revenue growth was slightly improved, so kind of 28% constant currency growth in the quarter, up from 27% last quarter. So an improving trend, and also a much better trend on profit margin too, both for their cloud business as a whole. But for Microsoft, 5 percentage point improvement in operating margins. And I think that took people by some surprise, because the whole AI trend that's driving their cloud growth is perceived to be quite processing intensive, which is expensive. So perhaps that margin boost also a bit of a surprise. And as you said, a bit of a contrast to Alphabet, where we saw their cloud revenue growth slip quarter on quarter. So they posted 28% growth last quarter. That slipped to 22% this quarter, and lower than expected profitability on the cloud business too. So their cloud business is barely profitable anyway. That's been a frustration for investors for some time. It moved into the green a couple of quarters ago, but missed expectations this quarter. So, lagging Microsoft on the top line growth and struggling a bit on profitability. And I think that's because they're a few quarters behind on how they're getting their clients to adopt AI. I think Microsoft really took people by surprise a few quarters ago with the pace at which they started to launch AI services, and people like Google are catching up.
This narrative, though, that Alphabet, that they need to really turn to cloud as the key driver of growth. Do you take a look at a quarter like this and say, okay, maybe it can't be cloud. It's lumpier. It faces stiff competition. That's maybe not the future star of the Alphabet business.
Well, I think it needs to be to some degree, because their core advertising business is largely maturing. It did better than expected this quarter, but not by much. And most of the signals for Q4 are getting weaker. I mean, look at Worldline's report today, pointing to kind of consumer spending softness in Q4. So I think they need cloud to be that extra source of revenue growth, driven by AI, to kind of give them an extra leg of growth into the midterm and justify those big multiples it trades on.
All right, Matt, thank you very much for the roundup. Again, those share prices doing two very different things in the pre-market session. Bloomberg Intelligence's Matt Bloxham. Coming up, Country Garden, it defaults on a dollar bond for the first time ever. That's right. It's official. We look at what it means for the developer and China's property debt crisis. This is Bloomberg.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The conversations that matter and the insights you need. This is The Pulse. I'm Danny Berger in London. Chinese developer Country Garden has been deemed to be in a default on a dollar bond for the first time ever. The company was once China's largest builder, but now its debt crisis is shaking the wider property market. It's also weighing on the country's economic growth. Joining us now from Hong Kong is our China economy and government reporter, Jill Desis. Jill, I mean, this was a long time coming, perhaps. It was expected that we would get a default on these dollar bonds. Does anything change now that it's official?
Well, look, Danny, I think that at this point, what this really means, it's the first record that we've actually have for offshore investors to really get that confirmation of default. So I think what other offshore investors are probably going to be looking at is whether there's any risk of cross default on their other bonds that they may have to look out for. So I think this really sort of kicks off that trigger, and then we have to see where they go from there. Now, more broadly, I think for Country Garden, this leaves open a lot of questions about what happens to the various properties that they've had in development. They've got something like 3,000 unfinished properties that are projects that they're still looking at, mostly in smaller cities. So I think this still leaves open what happens there. And then there's also a lot of questions for what's a very significant employer in China, right? I mean, they've already laid off 70,000 people, but they still have something like 60,000 employees to deal with. And then obviously, yes, Danny, I think we have to look out for whether there's any kind of, contagion or trigger on what this means for other property developers in China. So yes, long time coming, but there's still a long way to go in terms of what this ultimately means for these offshore investors and for the rest of the property sector.
Well, maybe not unrelated then, or definitely not unrelated, of the showing of more economic support. Xi Jinping making an unprecedented visit to the PBOC, issuing additional sovereign debt, raising the budget deficit ratio. Is this kind of the fiscal stimulus that a lot of us have been waiting for?
Well, look, Danny, I think that if you look at the size of the fiscal stimulus that's been announced, it's really a drop in the bucket, right? I mean, so we're looking at this 1 trillion yuan, so that's around 137 billion US dollars worth of additional sovereign debt that's going to be issued. We're probably not really going to see the impact of that in 2023, more likely in 2024, just because it takes some time to actually, invest in projects, move on. You've said that a lot of this is for disaster relief. I think that the method by which they're doing this, issuing this through sovereign debt, and then ultimately increasing the headline debt to GDP ratio above what's the 3% limit that's long been considered, by the government to be the end-all, be-all of the limit that they want to do. That I think that what that indicates more of is a shift, sort of, in philosophy about how China is thinking about policy right now. Right? I mean, they've been, allowing local governments to take on all of this off-balance sheet debt to deal with a lot of their problems. I think this kind of is an indication that's a very unsustainable model of taking on debt, and so they're kind of shifting the way in which a lot of this works. I think you couple that with Xi's visit to the PBOC yesterday, his first ever as the Chinese leader. This all kind of signifies this interest in sort of shoring up the economy and really not wanting to be complacent with this idea of growth that's okay but not particularly accelerating in any way. I think it kind of indicates that they're really, really concerned about what the economy looks like going into 2024 and beyond.
Right. Well, I'll tell you what, Hong Kong stocks at least reacting way more to that than they are to Country Garden, up some 2%. Jill, always a pleasure to have you on. That's Bloomberg's Jill Desis. Coming up, back to the earnings. Kering falls after reporting some not-so-Gucci results. Thank you to whatever producer that's made me read that. We're going to discuss the outlook for the luxury sector with our reporter in Paris. Up next, what pun will they have me read next? This is Bloomberg.
The younger generations are more, of course, pay more attention to sustainability, and so they are looking at brands that are greener. But you have to make sure you're authentic because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why part of the big transformation of our R&I, where there's this €1 billion we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
The conversations that matter and the insights you need. This is The Pulse. I'm Danny Berger in London. Shares in Uniper have jumped after the company raised its full-year profit estimate. The company says hedging activities tied to its power generation and natural gas pipeline business played a significant role in the positive results. The bullish forecast comes a year after the government bailed Uniper out with one of the biggest rescue packages in German corporate history. In other positive earnings news, ASM International, the semiconductor toolmaker, posted third-quarter sales that beat estimates. Revenue rose 9%, all of that thanks to a significantly higher contribution from China. ASM says it doesn't expect material additional impact due to U.S. export control measures imposed earlier this month. Okay, we got to talk about the downside, too, though, and there we have Kering. Those shares are moving lower today by about 3%. The company's biggest brand, Gucci, saw sales decline as it grappled with the challenge of a luxury goods slowdown that weighed on the label's profitability. Joining me now is Angelina Rascue, our luxuries reporter from Paris. Angelina, look, I could say it's been a tough quarter for luxury, but it hasn't for all of them. I mean, Hermès with some really banger earnings earlier in the week. What do you make of the haves and the haves-not this quarter?
Yes, that's exactly the case. In the case of Kering, we saw revenue drop across the board except for the eyewear unit. And obviously the brand that matters most is Gucci because it contributes about 2/3 of operating profit. And at Gucci, we know that the brand is in transition. They name a new artistic director at the start of the year. He only introduced his first debut collection last month, whose creations will only go on sale in the first quarter of next year. They also have a new CEO who took over in September. So you've got this transition, but with the backdrop of a global slowdown for luxury goods, and also in the past 2 weeks, geopolitical risks that could weigh on consumer sentiment, as the deputy CEO of Kering told us yesterday in the analyst call. So basically, all of that is challenging. And coupled with that, you have, also revenue drops at the other brands, Yves Saint Laurent, Balenciaga. That's because, Kering decided to reduce the wholesale distribution as they seek to elevate those brands. But also at Balenciaga, you still have, that brand is still suffering, especially in the U.S., from an ad campaign scandal that took place last year. So overall, that's weighing on Kering shares, and year to date, they've lost about 17%. And at Kering, and at Hermès, as you pointed out,
sure,
it's the other picture. Basically, it's the resilient model. It's they're not really catering to aspirational consumers. They have a model basically where demand for their
Angelina,
does
if I can jump in here, does this just mean that the Kerings, the LVMHs of the world maybe need to look at targeting the higher income bracket? If that's what's holding up in this downturn, do business models need to start changing?
I mean, Hermes is in a category of its own. Their model is pretty unique. It's very resilient. Demand for their bags outstrips their production capacity, and it's considered to be a flight to quality. And that's what the executive chairman of Hermes said in the first half results. When you have uncertain times, people go and they go to the quality. I'm not sure this is easily replicable across the board. Hermes is just one brand, whereas at LVMH and Kering, it's a conglomerate of different brands. So we're looking at different models here.
Yeah, I mean, totally fair enough. What did we learn about China demand in these results?
I mean, China demand, that's been the part of the disappointment across the board. There was a lot of hopes that in 2023 it would rebound after the strict lockdowns of 2022. And actually, what we've seen is that the macro picture in China is not that good. You've got youth unemployment, so that has actually weighed on demand there. So they're not splurging necessarily. And the Chinese, they're also not really traveling to Europe. We thought that with the lifting of COVID restrictions, they would come back eagerly to Europe, but that hasn't been the case. They're traveling maybe a little bit more regionally, to Japan, for instance. They're going to Hainan, which is a duty-free island in China. But right now, but also the mood hasn't been for splurging.
Right. And I guess, as you pointed out at the start of our conversation, certainly the geopolitical risks contributing to that holding back of traveling and spending. Angelina, thank you so much. That is Angelina Rascouet, our luxury reporter live from Paris. Okay, let's get another check on these pre-market movers with U.S. tech. Alphabet down 6.5%. Microsoft shares are higher by more than 3.5%. What is this? It is the divide between the cloud results. Microsoft able to lure more corporate customers in, saying, hey, look at us. We now have ChatGPT. That sort of acquisition, that purchase of them, of nearly half of OpenAI, helping to pick up speed for their cloud business. Alphabet, it's the opposite story. It's a lumpier business when it comes to cloud versus advertising, but still, it's not showing the shine that it really needs to if it's going to pick up the pace. Alphabet shares, those are down about 6.5%. Now, overall, it does mean that it's dragging the NASDAQ futures about 0.6%. So some of the uptick from Microsoft not really doing enough. Usually, tech does set the tone for this earnings season. I don't really know how that's going to happen this time when the results are so different. They are so idiosyncratic. What does that tell us about the quarter to come, about the rest of the week, the busiest week for U.S. earnings on a market cap basis? We'll continue to talk about it in the next hour. It's Bloomberg Brief. I'm sticking around here in London. Manus Cranny joins me from New York. This is Bloomberg.
Part of the baby boomer generation, and this generation is now increasingly dealing with problems relating to Alzheimer's, dementia, and so forth. Not particularly my age, but maybe some people my age, even younger, but obviously in their late 70s, 80s, and 90s, more and more we're reading about Alzheimer's. Is this an epidemic that you can't really do anything about, or is it something we could deal with in some way?
It's a real challenge for a lot of families, mine included. You know, I have a 90-year-old grandmother at home who's struggling with dementia, and providing care for her has been a real challenge. And for my family, we love her dearly. We want to be there for her, but it's painful for us to see the toll dementia has taken on her. This is rightfully, a concern for families across the country. We're investing a lot in studying dementia, to not just Alzheimer's, but other forms of dementia, to understand what's driving it. But very interestingly, there's also some research that's taking place, lifestyle research, if you will, on the impact of diet, of social connection, of physical activity, and sleep on dementia as well. Dean Ornish, professor at the University of California, San Francisco, has been actually one of the key folks, who has been leading some of that research on the impact of lifestyle and dementia. This is a promising area.
This is Daybreak Europe. I'm Kriti Gupta. Let's get to the stories that set your agenda.
Taking you from the U.S. market's close.
A lot of this was priced into the U.S. session.
To the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
From New York City,
In London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai. Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this
Is
story.
there the kind of upside?
Good morning from our world headquarters in New York. I'm Manus Cranny.
And from our studios in London, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
President Biden and Saudi Crown Prince Mohammed bin Salman speak as diplomatic efforts and military efforts to continue to prevent an Israel-Hamas war from spreading to the wider region. This as the Israeli ambassador calls on the UN Secretary General Guterres to step down. China steps up its support for the economy with additional sovereign debt issuance and an increased budget deficit, all as Country Garden's trustees declare the developer in default on a dollar bond for the first time. And shares in Deutsche Bank jumping by the most in a year. This is the lender plans for more payouts amid higher rates.
I'd say on a long-term basis, the benefits of higher rates will be with us into sort of 25 and beyond. This is not yet, I would say, a fully normalized rate environment for banks.
James von Moltke there, the CFO, an immediate response in the stocks. That's $3 billion of a payout and a guidance that this is what they're going to do with their capital. Being rewarded by the market this morning, up 6.43%. More from James von Moltke's interview with Danny Berger a little bit later this hour. I want to take you straight into the market. So you have a trillion yuan of stimulus, $137 billion. Market's unimpressed. That's China's issue. You have a stabilization in the EFO. Again, not giving any great strength to the American narrative this morning. It was supposed to be a cloud with a silver lining. Well, it was for Alphabet and Microsoft. Microsoft saw the benefit. Alphabet was the tortured soul when it came to the cloud numbers. The cloud numbers missed at Alphabet. The stock is down over 6% this morning. Microsoft, the strongest sales in 6 quarters at the top level, and it is their cloud business that's doing well. Despite all of that, equities are lower this morning. There just seems to be a flatness to this market this morning. When you look at Asia, they're desperate to try and hang their hat on this Chinese stimulus, but it is barely 1% of GDP. Back in 2008, when we were really in crisis mode in China, they delivered 12% of their GDP. John Liu joins us very shortly to contextualize the stimulus that has come through at the PBOC. Is it a game changer, or is it just more debt junky kind of issuance that you're going to have. To Europe, down 0.25%. Oil is stabilizing, down for a fourth day. That should have given succor to the European complex, but it hasn't. You have one major stock. You have a number of major stocks reporting. Porsche giving out good news, and then you have Worldline at the bottom of your screen. This is a French payments company, and it is bruised. It is down 50-odd% at this juncture, and that's what's dragging us lower here in Europe this morning. Danny.
Manus, it almost feels like earnings matter, that we can pay attention to earnings. At least that's what these markets are telling us. The movement is coming from idiosyncratic corporates. It's not really happening, at least for the time being, on the macro level. There was some action in the euro. It started out stronger on the morning, perhaps hopes of China stabilization from fiscal support. We had IFO numbers, better than expected survey coming from German corporates. Even so, euro unable to hold on to gains, weaker by about 0.1% versus the dollar at 105. 10-year yields, those are ticking up higher, 4 basis points. They had traded lower yesterday. It was the front end that got the boost yesterday thanks to stronger U.S. PMIs, which has been a clear contrast of strong PMIs in U.S. versus weakness in Europe. And I had the Aussie on here. Here was another narrative, Manus, that went away pretty quickly. CPI in Australia coming in stronger than expected. That did boost the Aussie. That did have the front end of the Australian curve up about 10 basis points. That's pretty much vanished. We are back to King dollar being the end-all, be-all. And with that stronger Australian CPI, it's not having an impact on the world bond market, but I still think there's just so much unknown a day on the eve of the ECB decision, Manus. When I was speaking to Von Moltke over at Deutsche Bank, he basically said that, look, a financial accident, it is a near certainty. It is going to happen. But when it happens, everybody has been surprised, the strength of businesses and the strength of households, that rope seems to keep getting longer.
Well, the whole world was evidently caught short when we had that banking crisis back in the springtime. You're looking at the banks under pressure again. Where will the accident happen? We're not in subprime land as we were in 2008. And I think Jamie Dimon yesterday in Riyadh really encapsulated the thinking of the markets. There's a fiscal largesse in peacetime. Look at the Chinese doing it again today. There's an omnipotent feeling that they're going to be able to manage this. And that's what fills that group of people around that table quite literally with dread. Let's pivot to a little bit more on the Middle East, this time on the diplomatic efforts. They continue. President Biden and Saudi Crown Prince Mohammed bin Salman discussed efforts to prevent the conflict between Hamas and Israel from escalating. Meanwhile, we have the Israeli ambassador to the United Nations demanding that Secretary General Antonio Guterres resign after his comments that he made in regards to Hamas attack on October the 7th. Oliver Crook is with us in Tel Aviv. Oliver, look, what is at the heart of this dispute? I watched the clip of the ambassador, and it was pretty hard hitting towards Guterres. This is a strong and strident call. Where do we start this conversation?
That's right, Manus, and this has spilled over into the sort of hallowed halls of the United Nations in New York with the Secretary General Antonio Guterres basically pointing to the Israeli actions within Gaza, saying that there have been clear violations of human rights. And I'm going to quote here because it's quite important to put everything into context here. He said, "The grievances of the Palestinian people cannot justify the appalling attacks by Hamas, and those appalling attacks cannot justify the collective punishment of the Palestinian people." He went on to say, "It is important also to recognize the attacks by Hamas did not happen in a vacuum," also adding that the Palestinians have been subjected to 56 years of suffocating occupation. This is what was not taken at all well by the Israelis. The foreign minister canceled a meeting with him. The UN ambassador, the Israeli UN, ambassador to the UN, basically went out and said that he was shocked by the statement, and he said it proved conclusively beyond any doubt that the Secretary General is completely disconnected from the reality in the region, basically saying that he's expressing an understanding for terrorism and murder. That is the political tension.
I mean, it's a tension that obviously this is a more important scale, but it feels like it's playing out in so many places. I mean, you look at what's happening at American universities and the dialogue there. That dialogue, be it in America, be it abroad, be it with the UN, that dispute, how does that fit into the broader trajectory of war?
Completely, Danny. And this is going to be at the heart of all of these conversations. What the Israelis will say is that they do not target civilians, that everything they do is to preserve civilian life. but that Hamas sort of clouds itself and cloaks itself within the civilian population. That being said, the death count from what we hear within Gaza has exceeded 5,000 people, closer to 6,000, most of whom are civilians. So, of course, this is something that you cannot ignore. And this will come to the question of self-defense. How expansive is that understanding of self-defense? And a lot of different people will have very different answers to that question. The Arab world say that what Israel is doing has exceeded that. Even the United States has said that how Israel goes about this is critically important. They have not made a sort of external criticism of that as of yet. But again, this is fundamental to every issue, including aid. For example, let's talk about fuel. Getting fuel in there is important for all of human life, but it's also something that will fuel Hamas's war effort. So it's at the center of everything.
Oliver, thank you very much. That is Bloomberg's Oliver Crook in Tel Aviv. All right, over to China now, where President Xi Jinping has stepped up economic support, issuing additional sovereign debt, raising the budget deficit ratio, and making an unprecedented visit to the central bank. Joining us now is Bloomberg executive editor for Greater China, John Liu. John, there's a note out from SocGen saying this is not yet a bazooka, but it's significant in form in signaling. What is the significance of that form and that signal?
So I think it's the way that Beijing is doing this that is very important. They are changing the size of the budget deficit in the middle of the year. It is very rare that they do this. The last time they did it was in 2008. The time before then was in the Asian financial crisis at the end of the 1990s. And also we had President Xi Jinping visiting for the first time since he's been leader of this country, the central bank. All of these things point to the idea that, hey, Beijing is willing to do things it has not done before to try and stabilize this economy.
It's interesting that there's sort of less than a punchy response from markets. So maybe it is, again, waiting to see how this feeds through. Can we talk about Country Garden, John? Good to see you today. It has been deemed that we're finally there, that there's a default on the dollar bond for the first time ever. So what took us over that critical line, John?
So there was a notice sent by the trustee of the bond, which Country Garden missed the payment on. Citigroup sent that notice. So that is the first official sort of statement that what has happened is a default. Obviously, the payment was due first back in September. They did not pay, and then the grace period ended a couple of weeks ago, and they again did not pay. And so this is something we've been waiting for. The fact that they have defaulted is not a surprise, but it will have implications for how other bonds, how other creditors deal with that money that they're owed, and also on the credit default swaps, whether those will pay out or not.
John, thank you very much. That is John Liu in Beijing. All right, let's get you some of your other top stories that are trending on the terminal this morning. House Republicans have nominated Mike Johnson of Louisiana as their latest choice for Speaker. Johnson, who is the party's fourth Speaker nominee in just 3 weeks, said he is very confident he will be elected Speaker. A vote is planned at noon in Washington.
Hong Kong's planning to cut extra stamp duties for some home buyers and reverse a pandemic-era increase in stock trade levies. The chief executive, John Lee, detailing the measures earlier today as officials seek to boost the property sector and revive the city's status as a financial hub.
And here's one you mentioned, Manus. French payments company Worldline is plunging. It's erased more than $3 billion of market value. That happened after the company lowered its outlook and scrapped its revenue growth target for the next year.
We're coming up on the show. We're going to catch up with Mike Scott of Man GLG on where you want to be in this credit cycle. What pops, what rocks. Plus, we'll speak to Tiago Kapulskis, dig into the tech earnings. Where is the silver lining in Clyde? Good morning.
think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges. Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in. Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is Bloomberg Brief. I'm Danny Berger in London alongside Manus Cranny in New York. Manus, John Authors has a great piece out today talking about credit. Within there's a little nugget from SocGen. I want to show you this chart because it's forward price to earnings valuations ratios for both U.S. and Europe small caps. If you look at the negative column, so that's way over to the right of your screen, in other words, the zombie companies in the Russell 2000, you can see it's significantly higher for the U.S. So what happens when we reach refinancing walls? Joining us now is Mike Scott, head of global high yield and credit opportunities at Man Group. I mean, Mike, when rates are low, this kind of thing doesn't really matter, right? But we are hitting, or we're getting close to those refinances in 24, 25, and 26. So what's going to happen to all those zombie companies in the U.S.?
That's a great question, Danny. And I think, you know, from what we see, this refinancing rule is coming certainly much more into view. You know, as we look across the globe, it's slightly more onerous, I would say, in Europe than the US. And, you know, as we look into 24 and beyond, these businesses are going to be experiencing a much higher interest rate environment for refinancing that debt. You know, certainly, certain businesses will be able to work their way through that. Other businesses certainly will not. And we do think that this will be very much a driver of dispersion as we look forward over the coming 12 to 24 months.
Mike, good morning. Good to see you, and thanks for coming in. Look, we can debate the size of the cliff or the debt cliff that there is, but continuing on from Danny's point, John Authors has a cracking piece out this morning, and the title of the chart is Money's Too Tight to Mention, and he looks at the Fed survey. And where we are, this is a quarterly survey, the proportion of banks that are tightening to loosening is 50%. We've only seen it exceed that in the GFC and in the pandemic. How tight is financing out there? Homage to John Authors, by the way. Big ring the bell for him.
Well, I would say certainly sort of echo that view. I think we are very much in the later stages of a credit cycle, and ultimately the actions by the central banks are there to tighten credit conditions. And what we see is...
but is it tightening quickly and aggressively? How would you define the tightening at the moment?
I think it's certainly, as we look forward into 2024, I think, you know, we are in a sort of the situation where you know, the ability for certain companies to access capital is going to be constrained. And I think, you know, as I say, there's going to be the haves and have-nots. You know, certainly what we look for are businesses that have, you know, sustainable cash flow generation. They potentially have assets in which they can monetize to delever the balance sheets. And it really is a case-by-case basis in terms of how the ability of these companies is going to play out with respect to refinancing of their maturity walls.
Can I just ask you, is it a relief to actually have this environment again where there are haves and have-nots? Because before it was like, okay, you buy anything and you're fine. It doesn't matter.
I think that's a very, very good question, because I think, you know, this is really an environment in which it really favors sort of active management and stock picking within the credit space. we have seen a number of sectors that have really benefited from that low interest rate world, of the low inflation, the disinflation period that we had over the past decade. Real estate being one, it attracted an awful lot of capital to effectively go on an acquisition spree and sort of build the businesses through acquisition of assets, and this is now coming home to roost. Whilst there are businesses that have been very prudently managed, they have very relatively simple capital structures, and can benefit from actually, or can actually have a relatively seamless refinancing.
So some are going to be okay. Some have prepared themselves well for this moment. Manis, jump in here.
Mike, I'm just wondering how brave are you feeling this morning? I mean, you've got a nice late start. I came in at 2:30. Just bear that in mind. Are you brave enough to look large into junk? I mean, they've repaired a lot of the damage done during the banking crisis. Danny and I chatted this morning before you came in, and we just thought, are you brave enough to sort of pick up junk, and if so, where?
So I think, when you look at the junk market, it's very important to look underneath the surface. I think too many people do look at the market in aggregate, and that really doesn't tell you actually what's going on beneath. And there are certain sectors and business models that we think can trade through this environment of tighter monetary conditions, but also one in which nominal growth is potentially not going to be as strong as we've seen over the past 3 years. And there's other sectors that we think will struggle to refinance in this new interest rate environment. We are seeing certainly value within businesses that have strong pricing power, stable cash generation, and often benefit from, say, hard assets. So we do think that consumer non-cyclical parts of the market, such as supermarkets, are quite interesting in this environment. As well as even financials, particularly within Europe. And I do think that is actually quite a stark difference to what we see within the US, and particularly the regional banking sector.
Yeah, that is interesting. Also, when it comes to the regional banking sector, I spoke with last month the Ares CEO, Mike Arangetti, who basically said, we're in 2 years of a banking crisis. It's not over yet. Do you see that, again, for both the regionals and in general of just a credit crunch that might be looming?
I think it's quite a specific issue towards the regional banks within the US. When we compare the regional banks to say, the European banking sector, we think there are very stark differences between the two regions. Europe, we think, has been very well regulated. Capital levels are very healthy, and asset quality is relatively benign to what we see within the regional banks. And from our perspective, it's the CRE exposures, or the real estate exposures that these regional banks have taken on, we think are going to be increasingly problematic. And we've started to see that with recent results. I think everyone's very familiar now with how the deposit situation has been playing out and the deposit betas, etc. But I think on a go-forward basis, it's really about the asset quality problems that these banks are now facing. Certainly provisions have started to pick up within the regional banking earnings that we've just seen. But this is going to be a story that's going to be with us for several quarters. It's not something that can be worked out through liquidity injections from the Fed.
Right.
Okay, Mike, thank you so much for joining us this morning. That is our guest host this morning on All Things Credit, Mike Scott from Man Group. A quick snapshot of what's going on in the bond markets. You've had some pretty big whipsaw days. You're just seeing yields rise ever so slightly. 10-year paper still firmly below the 5% plimsoll line. 485 is where we are this morning, but there is a nudge higher on German yields as the IFO stabilizes in Germany, and gilts up small at 455 right here on Bloomberg. Good morning.
names in climate change are on Bloomberg.
I want everybody committed to the kind of action that we need. We have a global emergency now. You know, we're still putting 162 million tons of man-made global warming pollution into the sky every day, using the sky as an open sewer. That's trapping as much extra heat as would be released by 600,000 Hiroshima-class atomic bombs exploding every day. That's what the scientists tell us, and the data shows it. That's crazy. That's why we have a third of Pakistan underwater. That's why we have the historic heat wave in China, nothing comparable to that ever. That's why the heat records are broken every year. And we're seeing an increase in the flows of climate refugees crossing international borders that are due to vastly expand unless we take action to solve the climate crisis.
Nobody covers climate change like Bloomberg, your global business authority.
Good morning, good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to the Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power.
This is Bloomberg. The top names in global leadership are on Bloomberg.
Right from the start, I decided to open our border and to take in millions of refugees from Ukraine. We believed, and we still believe, that it is necessary, and we try to serve as neighbors should do.
If we want peace, if we want a negotiated outcome, strengthen Ukraine on the battlefield, because that's the only way to convince Putin that he will not win on the battlefield.
Nobody covers the top global leaders like Bloomberg Television and Radio. Context changes everything.
This is Bloomberg Brief. I'm Danny Berger in London. Manus Cranny is in New York. Shares of Deutsche Bank, they've climbed. They've been climbing all morning after the firm announced its plans to accelerate payouts as higher rates fuel growth. But what about the macro environment? What do higher rates mean to that? Here's what CFO James von Moltke had to say on that.
There's a certainty of accidents in an environment of rising rates, especially as rapid as it's been over the past, say, 18 months. There have been accidents out there, some reactions, but my overall sense is that the resilience we've shown in the financial industry, the financial markets, as well as corporates and households, has been unusually strong. Will there be more accidents? I'm confident, but at this point, actually, again, surprised on the upside that it's been as contained as it has.
I feel like this is the tension we're all grappling with at the moment, Manus. I mean, you recall to the beginning of last year when everyone said a recession is on its way, something's going to break. Plenty of people have told us something's going to break, but it hasn't yet. Things look okay.
No, I mean, you can technically say you had a spring break, excuse the pun, with First Republic and the other banks.
I like that.
The question is it going to be banking or is it going to be something else in the real economy? Anyway, we're going to catch up and talk about the real economy and tech earnings with Tiago Kapulskis. He joins us next.
Let's suppose you're on a plane and somebody realizes who you are. They say, I have $100,000. I don't know what to do with it. Where should I invest it? Where should they put their money?
So today, it's a easier decision than it was maybe 2 years ago. because Treasury bills are 5%. So I would say, regardless of how much risk you want to take, you have to put a portion there. Then you would have to ask, really, an individual is the same, I think, as any institution. What is your time frame? Do you need to get access to this $100,000 in the next few weeks, the next few months, the next few years, not until you retire? And that will determine your investment decision.
So what do you think is the most common mistake investors make when they have 100,000, $1 million, or whatever they might have? What is the most common mistake you have observed that investors make?
I would say hubris and thinking you know more than you do, because every decision that you make has many, many layers. So as you're creating a portfolio, look at the risk as well, not just excited about the return.
And what's the best investment advice anybody's ever given to you?
Continue to learn about innovation in whatever you do, because that is where it's not exciting, that's where returns will go.
From New York City,
From London and Sydney.
from Washington,
In Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this
Is
story.
there the kind of upside?
This is Bloomberg.
You're welcome back to Bloomberg Brief. I'm Menace Cranny in New York.
And I'm Danny Berger in London. Here's what you need to know. President Biden and Saudi Crown Prince Mohammed bin Salman speak as diplomatic and military efforts continue to prevent the Israel-Hamas war from spreading to the wider region. This as the Israeli ambassador calls on UN Secretary General Guterres to step down. China steps up its support of its economy with additional sovereign debt issuance and an increased budget deficit ratio, all as Country Garden's trustees declare the developer in default on dollar bonds for its very first time. And shares of Deutsche Bank jump by the most in a year as the lender plans for more payouts amid higher rates. Now, man, that China story, it had really done the work this morning to lift European futures, to lift the euro. We are looking at something very different at the moment. Over the past 30 minutes, as we've had our show, I don't think it's us. I don't think we've broken anything. Euro has moved decisively lower, still at 105, but now lower, weaker by 0.2% versus the dollar. There's a clear dichotomy between European data that has disappointed and strong U.S. PMIs that we had yesterday. The IFO survey, though, in Germany did point to, hey, perhaps Germany can avoid the worst of a downturn. 10-year yields in the U.S., those are moving higher by 4 basis points. Again, no drama, a rare treat for what's been over the past few days. And Aussie, again, man, is this surprising strength from the greenback, even though Australian data for inflation came in hot. Maybe a little bit of taste of what might be in stock for the rest of the world trying to grapple with rate rises. We have the ECB tomorrow, but it's a really clear buy the dollar kind of day.
Yeah, and even that stabilization in the EFO isn't enough to give succor to the euro. And you're right about the PMIs, globally the highest in 3 months, and inflation reading in those numbers are the lowest since the 2020. Stocks this morning are lower on NASDAQ. Why? Because the Clyde was supposed to have a silver lining. Well, not for Alphabet. It missed, and it really took a bruising. Down over 6% in the pre-market show. The other side of that coin is, of course, Microsoft. Microsoft delivering the strongest earnings in 6 quarters, and it was their cloud business in Azure that was up 29% in terms of numbers. Stocks are lower there. Asia is trying to understand what the stimulus story is from China. Yes, it's an emergency intervention. It's 1% of GDP. They haven't done this since 2008 or indeed during the Asian financial crisis. Asian stocks take a little bit of heart from there. Europe is lower. You've got Worldline down, but Porsche, I just thought we would focus in on Porsche. They're delivering more 911s. The deliveries are up by 27%, but they are warning about inflation and they are warning about China. And to that end, Danny, Porsche is certainly dipping a little bit this morning. So get your orders in. Get them in early, boys and girls out there, for your Porsche 911.
I promise you I will not be buying
I can see you in a
Porsche
Porsche with the top down, actually. I can see you in a 911 Carrera. Yeah, you're a Carrera kind of guy. You really are. I've got you
Here's my dirty secret, Manus. I have a UK citizenship, but I never got my driver's license here. It's illegal for me to drive in this country.
Well, I don't know how to respond to that because
Maybe there's no response. But Manus, you know what I'm thinking of when I see these different stock movers you have pointing out is our conversation with Mike Scott of Man Group moments ago. You know, it's nice to be an active manager, a hedge fundy in this environment when you finally have some dispersion among different companies. I mean, dispersion, we should say, even within the tech sector. We're going to talk to Matt Bloxham about this in just a moment. But you have differences even when it comes to cloud businesses among different companies.
Well, I mean, I got to say, you know, every cloud has a silver lining. Did you like that? I mean, I actually thought about it. Yeah, I sent that through to you last night. You didn't read that email. You can actually see the emails that you don't read from me. But the point about it is, of course, for Microsoft, I mean, the scale of this cloud business, this is sort of has made or broken, I should say, sentiment, and it's very, very obvious between Alphabet and Microsoft, isn't it?
It really is. And I mean, how much of it comes down to the AI offering from Microsoft? Well, I'll tell you who can tell us better than I definitely can. It is Matt Bloxham from our Bloomberg Intelligence team. Matt, great to see you. How much of Microsoft and the popularity, well, relative popularity of their cloud business versus others is due to just their one step ahead on AI?
Well, I think that's clearly what's driving the current relatively good momentum. I mean, I think the fact that they're in every corporate pretty much around the world has been a real great foundation for them to build their cloud business into what it is today. I mean, it's 3 times the size of Google's cloud business, so, you know, it's kind of really quite staggering that the relative size. But, you know, they definitely stole a march on the other big tech firms about how quickly they got generative AI out into the market. This partnership with OpenAI, ChatGPT, shifting to generative search with Bing, you know, that I think they really surprised everybody there, and that momentum has allowed them to kind of build this growth. So an accelerating growth rate this quarter on cloud, whereas we saw with Alphabet that it was a decelerating trend.
Let's just pick up on that. Matt, good to see you this morning. Thanks for coming in. That deceleration that you say for Alphabet, of course, they have other legs to their stool which were performing quite well. But why this differential? Does this come down to price? Does this come down to product? Does this come down to a bifurcation in the market, if you will? There's a number of major players out there, Amazon, Microsoft, and Alphabet. So is it becoming crowded, and is it becoming competitive, and is that why Alphabet has perhaps slipped a little bit?
Yeah, I mean, it's a very competitive environment. Obviously, the cloud's dominated by those 3, Microsoft, Amazon, and Google. But, you know, Google's a distant third. And I think to some degree it is about product and timing. You know, as I was just mentioning, you know, Microsoft's been ahead of the game getting generative AI products out there and integrating generative AI into its suite of Office products. And I think Google's just a little bit slower on that. You know, they were behind on Bard, which is their generative search tool. And I think it's going to take them a bit of time to catch up. And you know, they were already a little bit on the back foot trying to kind of build share. And that's just another challenge for them.
I feel bad moving away from the cloud because Manus had the pun of the morning with his silver linings. But I got to do it. I got to break Manus's heart here a little bit. Look, obviously the share reaction price has been on cloud. But what about other businesses? How does online advertising look in this current environment?
Yeah, do you know what? I think that's the thing that Google will be frustrated about. Is actually their digital advertising business held up pretty well. It was better than expected in the quarter, but it's a big, mature business. I think, you know, I think it's been more resilient perhaps than people thought to both the economic headwinds, but also the challenge from Microsoft with Bing. You know, there was a moment where people were worried that suddenly Google search was going to lose its dominant position because of Bing, but they've held that off. I think the issue there is that there are clearly economic clouds brewing. Some of the signals we've seen today and in recent weeks from ad agencies has been around, you know, slowing spending by clients in Q4. So I think it's a mature business, and I think if Google's going to justify the big multiples it trades on, it needs to convince it's got an extra leg of growth, and the extra leg of growth is cloud and AI.
Matt, these tech stocks, many lambast the fact that we have such core concentration and a lack of dispersion, to Danny's point. But how important is the next step? We're going to get Amazon. We're going to get a number of the other big beasts. We're going to get Meta as well. How important are they? And they've got their own issues at the moment. How important are they in terms of understanding what's really at the heart of the American consumer? And I'm thinking more so about Amazon, really.
Yeah, no, I think that they're all important to a degree in their different way, and I think until you see all of the results, it's hard to put that. It's quite a complex mosaic that we're looking at. But obviously, Amazon gives you a slightly different cut to it. You know, you're getting the health of the U.S. consumer through their online consumer spending platform, but also you're seeing, you know, the strength of their Amazon Web Services cloud business, and obviously Meta as an indirect sense on kind of brands' confidence, because like Google, that's another big source of spending for advertisers. So I think, you know, we're going to see additional data points, and I think probably at the end of this week we'll have a much clearer view about the health of the US consumer, the pressures going into Q4, which is always a really kind of big spending quarter, both in terms of the consumer and brands on advertising.
Okay, Matt, thank you very much. Matt Bloxham there. A review and setting the stage forward for the rest of the tech earnings. Danny, we need to pause for a moment. We have some breaking news headlines coming from Prime Minister Erdogan in Turkey. Erdogan says this is going to perhaps escalate into a different story. Erdogan says Hamas is no terror organization, but a liberation group. Israel is the only state bombing cities day and night. And of course, it must be said, there are two sides to this. And obviously, there are the Hamas attacks, there is the Israeli response. Erdogan says he has cancelled his plans to visit Israel, and that he is saying Erdogan's Israel Netanyahu has abused his goodwill. So the top line here is he's cancelling his trip. He's making comments in regards to Prime Minister Netanyahu. This is, you have Joe Biden talking to Mohammed bin Salman of Saudi Arabia, trying to de-escalate the situation. You've also got other European leaders coming to the region, Danny. You've got the Austrian Chancellor, Karl Nehammer, arriving as well today. And this all comes, of course, as the Israeli calls on Antonio Guterres, the UN Secretary General, to step down.
Yep, look, these are some very strong, passionate lines coming from Erdogan, saying that, as you say, Hamas is not a terrorist organization, but we should note that the US, UK, Europe, they all classify Hamas as a terrorist organization. But again, what does this mean for diplomatic efforts, Manis, if we do have Erdogan saying that he has canceled his visit to Israel?
Indeed, as the overall US military build-up in the Eastern Mediterranean rises, there's certainly a pause in the full ground invasion. That is for sure. Some hostages have been released, and some small parts of aid have got through. We'll return to these Erdogan headlines in just a moment, right here on Bloomberg. We'll leave you with a snapshot of the FX market. It is the dollar. Excuse me. It is the dollar up by 0.25%. I'll leave it with you, Danny.
All right, there you go. Aussie, it is weaker. It's all about King Dollar this morning, as sterling also tanks lower by 0.3% as Manis goes and grabs a glass of water. This is Bloomberg Brief.
Daybreak Europe, I'm Kriti Gupta. Let's get to the stories that set your agenda.
Taking you from the U.S. market's close.
A lot of this was priced into the U.S. session.
To the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Knife making is almost meditative for me. There's a lot of passion behind it. There's a lot of hard work behind it. And it's not just something that you kind of just brush off like, oh, this is just a knife. people hands touches. Like people pour their passion and their soul inside of these products.
The art of blacksmithing has a very long history. Our notion of what it means to be civilized is to have metallurgy, to have the ability to transform the natural world.
When somebody used my knife, I want them to say, damn! Golly, this is a badass knife.
The top names at the Fed are on Bloomberg.
The economy is handling much higher rates, at least for now, without difficulty. So notionally, that might tell you that the neutral rate has risen, or it may just tell you that we haven't had rates high enough for long enough.
The bond market has tightened quite considerably. If financial conditions are sufficiently tight, our work is not necessary because we don't need to boost them more.
Nobody covers the Fed like Bloomberg. Context changes everything.
This is Bloomberg.
Will the Republican Party decide to do what the people want and work with Democrats? Or will the Republican Party continue just to fight with themselves? And that's really hard. If they're willing to do that, yes, we are here to do the people's work, but they have to be willing to actually to commit to some things that have become, anathema within their own caucus.
Democratic Congressman Sean Casten of Illinois speaking to Bloomberg. Joining us now is Jonathan Tamari of Bloomberg Government. So, I mean, on a daily basis, Republicans in the House remain in chaos, don't they? I mean, Tom Emmer, he lasted 4 hours and then he dropped out. I mean, listen, so now we've got Mike Johnson from Louisiana. He's being put up. Okay, just simply, does he have the numbers? Does he have the 217?
No one will know for sure, but he seems closer than anybody else has throughout this whole process. As you mentioned, Tom Emmer lasted 4 hours. Johnson is speaker nominee number 4, if you're keeping track. But the sounds coming out of last night's meeting were very optimistic. We've heard that before, but there seemed to be praise from all wings of the conference last night when Republicans came out. There's no major enemies that we've heard of immediately against Johnson, no major immediate criticisms, at least from a Republican perspective. Democrats certainly have some criticisms of him. But he seems to be the closest one to get there, and a lot of Republicans are so tired of this, there's a sense they might actually get this done today.
Wow. They would get it. I'm almost in disbelief. I feel like every morning I've woken up to someone new. So that seems significant. It could happen today. But one thing, Jonathan, that I saw circulating around yesterday was this post by former President Donald Trump on Truth Social, basically railing against Emmer, saying he says he's a Trump Republican. He's not. He's a rhino, et cetera, et cetera. How much of the shift is because of Trump, and what does that say to us about his staying power in GOP politics?
Well, I think it certainly tells us that Trump is the dominant force in Republican politics to this day, even out of office, even having lost re-election. His Truth Social post, Emmer, he was kind of in trouble already, and that post really buried him, most people think, yesterday. The opposition to Emmer came largely from people in Congress who are aligned with Trump. So he's a very forceful figure. And notably, Johnson has one key thing that Emmer did not. Johnson voted to overthrow the results of the 2020 election in 2 key states, Arizona and Pennsylvania.
Do you think that gives him? Do you think that gives him? Do you think that gives him strength with those marginal holdouts who can fill or kill every speaker that comes along? I mean, is that, for want of better words, is that a good thing? That he went down on that side? Will that curry favor with the four, maybe 5 holdouts that perhaps are the swing in this election?
It appears so. I mean, the folks in that wing of the party who came out last night, people like Matt Gaetz, Congressman Bob Good from Virginia, these are people who voted to get rid of Kevin McCarthy, the former speaker. They were full of praise for Mike Johnson. So, obviously, we know that attempt to overturn the election was based on a lot of lies and falsehoods, but within the Republican conference, it's not a negative, and for some people, it is a positive.
Jonathan, lest we forget, while all this is going on, we are fast approaching the next deadline for a government shutdown. Does the length of this, how long the saga takes, how does that end up impacting Republicans' ability to reach an agreement to avoid a shutdown?
It doesn't really give them much time to negotiate, honestly. I mean, we're only a few weeks out here. It takes a long time to process these bills through Congress. It makes it all the more likely that we're going to see the exact same thing that got Kevin McCarthy kicked out of the speakership, which is a short-term spending bill until they can work out a longer-term deal. The difference happens to be, according to people supporting Johnson, that he has trust within the conference. He's got a little more built-in trust if he does make a compromise with the Senate and with President Joe Biden, whereas a lot of them were already skeptical of McCarthy before he cut the deal. But bottom line, they're almost certainly going to have to do a short-term compromise deal, the same thing that Kevin McCarthy did in September, right before Republicans kicked him out of office.
Let's just round off with one final thought. Where is he on war funding?
He has been a skeptic on Ukraine, so that is going to be a major sticking point potentially with the Senate and with the White House. Democrats want to tie Israel and Ukraine aid together to make them one package. A lot of Republicans oppose that, and Johnson has been critical of that aid, so it's going to be a major question if he does become the speaker.
Okay, well, certainly there's a request for $100 billion worth of war funding for Ukraine and Israel. Jonathan, thank you very much. Jonathan Tamari there of Bloomberg Government, right here from New York and London. Good morning.
That's me, Max. What's up? How are you? I have been writing about Wall Street for almost 15 years. And what that means is I write about feuds and rage and rises and falls and comebacks. And every now and then, I also write about a couple of villains. Thank you so much. And now, I am about to do something new and very, very scary. We are making a show, and it's based on Bloomberg Businessweek magazine. So what is this show about? It's a show about money, power, culture, pop business. We're gonna ask complicated and profound people about their ideas, their careers, their lives, their risks, their failures, their imagination.
It's so incredibly liberating not to care what other people think.
I was giving my tools to other communities. I wanted to bring those tools home.
Tune in. Like, please, like, really actually tune in. I desperately need an audience.
Welcome back to Bloomberg Brief with Danny Berger in London, Manish Cranny in New York. All right, let's take a look at what's ahead, get you set up for your trading day. First, we're going to have data, new home sales. Those come out of the U.S. at 10 a.m. Eastern. At the same time, at 10 a.m., Bank of Canada, it will announce its rate decision. And then after the bell, the tech earnings, they continue. We've got Meta, We've got IBM. All of them, Manus, will report after the bell. We had those mixed results from Alphabet. We had those mixed results from Microsoft. Will they continue?
Yep, well, we're going to know a little bit more about advertising and consumer trends as we go through this next set of earnings. Let's have a chat about the GOP. They may be in chaos, but earlier this year, it was the former crypto empire, FTX, that was the shambles, wasn't it? Bloomberg Originals' first feature-length documentary, Ruin, goes deep inside the story of Sam Bankman-Fried and his company's downfall. Joining us now is Bloomberg's Annie Massa, who's worked on the film. Good to see you. Exciting. This is the first. So what's the new info that the viewer, if they tune in, what are they going to learn about SBF from this documentary? I suppose really, I mean, this case has been fascinating so far.
Absolutely. It's been covered in a lot of depth, but I think the benefit of this documentary will be to take you inside and on the ground in places where the SBF and FTX story really unfolded. You'll hear from people who were embedded in the industry, who knew him directly, who invested in his company or covered the downfall. You'll hear from all kinds of Bloomberg journalists, and it really takes you to a new level with the story in a very visual way where you can see what happened.
So it's still unclear, Annie, whether or not we'll get Sam Bankman-Fried testifying in his own trial. Why is that important, whether or not we hear from the man himself?
The trial has been ongoing, and this is one of the questions that is really top of everyone's mind, is whether Sam will speak up to defend himself. In a typical white-collar criminal case like this one, you would not see someone testify in their own defense. But of course, SBF is a defendant who's very different from most out there. So the remaining question is whether he'll take the stand himself. And many have speculated that he might decide to opt for that, to speak up in his own defense.
Okay, well, we are all waiting to tune in. It's a first. Annie Massa there on Ruin. Tune in tonight, 6 p.m. Eastern, with a Sam Bankman-Fried story for you. Danny, a little bit of breaking news. This is from Christian Saving, the Deutsche Bank CEO. I know you caught up with the CFO, and he is talking about a very cautious view on hires and the job cuts, and this is critically important. The job cuts that are coming down the pike, they've announced additional savings are going to be bigger than what they announced back in April time. So this is doubling down on the commitment on new cost cuts and efficiencies, isn't it, Danny?
Yeah, I did talk to Von Moltke about this. He did say they'd be bigger. He did say that they'd cut jobs as a part of it. But what's new about this, Manus, as you mentioned, is that the job cuts will be bigger. The last time they announced cuts, it was 5% of senior non-client-facing staff. That equates to about 800 senior staff. They're also very cautious on new hires. If you're going to cut back on costs, Manus, I guess this is where you got to do it. You got to do it on the people, and we're seeing that come through.
Yeah, and of course you've got this tussle, haven't you? As with all of these banks, you've got the fixed income team relative to the deals team. The fixed income team underperforming relative to the U.S. Wall Street peers. And then, of course, they've downsized some of that IPO deal-making business, so it's just not enough to balance it. I'm just looking back on the 27th of April. They announced 800 senior back-office staff. And this was his step up. This was savings step up to cut jobs back then. So they had originally estimated they'd save 500 million by 2025.
Yeah.
So this is upping that target, isn't it?
It is, and I contrast that with Goldman, which, let's be honest, is a completely different bank with a completely different business set.
Yes.
Remember, Manus, in their earnings, they were going to pay up for more. They said we need to retain talent, a lot of uncertainty. $690 million extra is what they were paying out to try to hold on to people.
Well, you know I want to come back as a junior banking analyst. I'll just leave you with that thought. From Bloomberg Brief to Bloomberg Surveillance, from Danny and I.
The shape of the On athletic shoe is unique. It can't be mistaken for any other brand. The structure of On's C-suite is just as distinctive, starting at the top with a pair of CEOs.
What we realized very early on is if you're adding different capabilities to each other and you do that as equals, then this leads to better outcomes.
Mark Maurer joined On as Chief Operating Officer in March 2013. Martin Hoffmann arrived as CFO that July. In 2021, they jointly assumed the CEO role.
We are a brand that needs to be excellent in designing product, in innovating product, but also in shipping millions of parcels from A to B in the most efficient way. So we need to have very different mindsets and very diverse people. Mark has different strengths, I have different strengths, and if you take us together, you just get more.
Companies with co-CEOs are rare, but On's configuration is even more unusual. Martin Hoffmann also holds the CFO position. He says his two jobs complement each other.
I actually feel the CFO makes you a better CEO, and the CEO makes you a better CFO. Understanding what you build as a CEO helps you to understand your numbers, and understanding the numbers helps you what are the right things to build.
The top names in global leadership are on Bloomberg.
The conflict between the US and China has escalated so much. This is one of my greatest fears, that the small nation is forced to choose sides.
Bloomberg. Context changes everything.
This is a transitional period. Transitions aren't easy.
The bear steepening that we've seen in the curve over the past several weeks and months has really driven everything.
Eventually, you will have to refinance at these much higher rates, and that's the reality of higher for longer starting to bite.
Markets have started to price in these different expectations for bond markets.
Okay. Investors are looking for any glimmer of hope to start an end-of-year rally.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. John Farrow continuing on vacation. Saw him yesterday on the cruise.
How was it?
What a great turnout on the cruise yesterday. Thanks to Sikorsky for getting me back up. Catherine Greifeld. Catherine Greifeld joins this morning. She said she'd only come in if BitDog hit 35,000.
Yeah.
She's here.
All right.
She'll explain why Bitcoin's popping way over 30,000 here. It's going to be in your IRA soon. We'll get to that in a minute. Greifeld, Abramowitz, and Keene here with a really interesting show here because yields are up. Thank you, Bill Ackman. Things are a little better, but Lisa, I walk in and I look at the Bloomberg terminal, 8.04% on the bank rate 30-year mortgage. We're now solidly getting above 8%. And that's what I think with this yield story, that's what people are living.
Well, and this, I think it's a great point, that basically we have seen these incredible fluctuations. We're talking 20 basis points in a couple days in the long end of the yield curve. And people are saying this volatility can't continue, or can it? And they're so focused on the volatility that they're forgetting the levels. And the levels that we're at are suddenly different. And that causes a different reality for people actually financing the nuts and bolts of their businesses and their lives.
Economics with Bramo, the level's what matters. And the level last night on earnings, I'm going to go, forget about the gloom. The media wants to go, oh, Google, they're all going to die. Microsoft was like a charm. Yeah. It was like if you run Central Casting, Satya Nadella, this is exactly what we want to say. Microsoft was exactly what on target.
I think the fact that you had two behemoths comprising 10% of the entire S&P index coming out, and you had Microsoft blow it out of the water, Google disappointing, both on the same metrics, which is cloud computing, right? Microsoft winning, Google losing. Yeah. At this point, what it shows is the dispersion that we hadn't been seeing before. Everything had been going in line. Suddenly, you can have one winner, one loser, and it can kind of balance itself out in the overall index, and you have a consolidation of market share in specific sectors.
Well, it's a 4% move. We got a 330 on Microsoft, the gloom and doom popping up to 342 this morning. We got to get it out of the way, and we'll repeat it every hour. Her agent said we have to. Greifeld, Bitcoin with a pop. What happened? I thought it was all over it.
16 or 18,000.
There is a lot of optimism right now that maybe we're finally going to get a U.S. spot Bitcoin ETF. That seems to be the primary driver behind what we've seen over the past 2 weeks or so. But I'll note, from a traditional ETF industry standpoint, we're still potentially far away.
Okay, this is critical. I got to stop the show here because this is about global Wall Street. Global Wall Street wants to sell Bitcoin. Why can't they?
Well, so the thing is, you can offer it in private funds. A few of the big banks have been doing that, but to get it in ETF, which you can go onto your brokerage account and buy it with one click, that hasn't been available yet. But the question for Bitcoin is who's going to buy it?
Bramo wants to weigh in.
Okay, well, no,
Are you thinking?
I have a couple of things. Okay, number one, do you like being pegged as the Bitcoin correspondent?
It's nice to have a lane.
Okay, all right. Number two, I'm just wondering whether it's become obsolete as one of the global features, as we're talking about havens, as we talk about the potential for it to be a commodity-like substance.
Well, the beautiful thing about Bitcoin and why it's not so bad being the Bitcoin correspondent is because the narrative changes all the time. You can attach any narrative you want to the crypto world.
Welcome to surveillance.
That's what we're doing.
That's what we're doing in surveillance as well. I'm going to keep the data check short. The brief is so important. Red and green on the screen. The yields, yeah, they've come in a little. Thank you, Mr. Ackman, again. But I really want to emphasize yields have not adjusted technically. 5.08, 2-year, 4.87. Now, 30-year bond just under 5%. Brent crude, if I can find it on the screen. I have so many properties, I can barely know where to look. $88 a barrel on Brent crude. Shall we brief?
Let's brief. Bank of Canada rate decision. A lot of people would say, who cares? I care a lot. It's at 10 a.m. and it often sets the tone for the rest of the central bankers. The next one being tomorrow, the ECB. 2-year yields kind of flattening out here. The expectation is that they will hold the new pause, the new conditional pause that we're going to get all across the complex. 1 p.m. This is just for you. There's going to be an auction. The auctions are getting more exciting. There is the U.S. Treasury selling $52 billion of 5-year notes. Okay, you're falling asleep. This is anything but sleep-worthy. Yesterday, there was a 2-year yield auction, 2-year bond auction. Normally, no one cares about that because that's basically been pegged on the front end. And yet, everyone was paying attention on tenterhooks because are we going to get the same kind of reaction as we've gotten on the 10-year and the 30-year auctions, which were messy? I know you're sitting there thinking to yourself, just keep selling it, Bramo. But I am going to keep selling it because it does matter. And today, just continuing with the earnings picture, Meta and IBM shares coming out, their earnings coming out after the bell.
Yeah.
Year to date, just giving you a sense of the dispersion between the haves and the have-nots within the tech space. Meta, up 160% year to date. IBM down 2.2%.
And frankly, IBM off the Google Cloud disappointment maybe has some real value to peruse here this afternoon. Look to Bloomberg Technology for cover on that. And of course, we will look to the Eastern Mediterranean. Our Oliver Crook is in Tel Aviv, and we'll have a brief here. Other worthies coming along as well, including Anne-Marie Horton. We start strong with Marvin Lowe, Senior Global Macro Strategist at State Street here. In this time of confusion and cacophony, I guess I have to rebalance. I have to reallocate. Has the rebalance formula changed because of this yield move?
I mean, for sure, everyone's thinking about, whether 60-40 is appropriate. What we're seeing in terms of the institutional investor is that they're so underweight fixed income at this point because the losses have been so great that they're still trying to catch up. If you're a bond bull, it's encouraging because they're still engaged with the asset class, but do they settle below that 40% once we get there?
I thought of you. They said Marvin Lowe's going to open the show, and I thought of you. In a cold of winter, Peter Lynch used to walk around the streets of Boston without a coat on. He looked like Jim Jordan, except it was 10 below zero. And he'd have his value lines, and he's walking to meetings with Will and the rest of Bettina and the rest of them. Okay, great. That's all fine and well, but to me, the securities analysis now is just out the window. It's about survival. How do you survive in an allocated portfolio?
I mean, for sure, you are reevaluating duration in terms of the story. And you have to remember that duration is much more than just your fixed income holdings. The U.S. equity market is very duration heavy, so you've got to be really conscious of where those long yields are affecting your portfolio. Keeping powder dry right now is not a crime. Absolutely not, particularly given the shape of the curve, particularly given that the Fed's going to be higher for longer, probably for a lot longer than people think in my mind. Keep that powder dry because things are still going to be rough going into next year.
What does that mean, powder dry? Because it doesn't just mean that you take cash and you put it in a mattress. No. Do you put it into T-bills? Do you just keep it into your treasuries?
I love bills. 2 years feel pretty good to me at this point also. You know, if you wanted to extend from your bill structure in your portfolio, I think, you know, you could add that kind of duration. You can nibble on the 10-year for sure, you know, if you like that income. But yeah, you know, I'm looking at the short end out to 2 years.
Does this mean that you're concerned about risk equity valuations and other parts of the market that maybe haven't fully comprehended the level and have ignored it because of the volatility that's gotten so much more significant than what we're seeing in equity volatility?
You know, for sure. If we look at, you know, even since the Middle East conflict, it's been rates that have moved. Everyone else has been kind of frozen, if you will. The dollar hasn't really moved, FX hasn't moved, and equities are trading, you know, fairly well in a wider range. They're not reflecting the volatility that rates are showing. And, you know, ultimately I say to a lot of folks, the most important number out there is that 10-year yield, and that 10-year yield is unanchored right now.
And that's what I want to talk about, staying in the fixed income market for right now. I mean, the most important question, it feels like, is why are rates rising? And I'm looking through your notes, and you write that you would push back against the buyer's strike thesis. Why is that?
First off, you know, like I said, the institutional investor is still buying. They're still trying to get back to their benchmarks. We actually are able to also look at cross-border flows at that institutional level, and they're still buying. So they're buying it unhedged. There's various stories around the dollar that you could infer from that. But MOF data around Japanese buyers, they're still engaged. China, kind of looking at tick data. They're not buying as much, but they're buying based on what their reserves let them buy. So we really haven't seen that kind of buyer strike. That seems to be one of the themes that are out there. Certainly, all of the issuance is an overhang. And so, yeah, I agree with you, Lisa. It's like these auctions become more and more important, particularly as we go into November and understand how the next phase of all this deficit funding is going to look like. But the buyers are engaged. There's just a lot of paper right now, and the knife is pretty big and falling still.
Well, to that point, okay, maybe there's not a buyer strike, but there is a lot of supply here. And with that in mind, you look forward to next week, which is going to be very fun because we have the refunding announcement in addition to the actual Fed decision. For the direction of this market from here, which do you think is more important?
You know what? I think the supply is more important. The Fed's message is pretty well crafted at this point. It shows that they don't really have a handle on how this is going to evolve, and I think that's part of the volatility out there. But given that they've pulled back and turned more, you know, less hawkish, if you will, with the volatility in the market, they're not looking to introduce much more into it. At this point, we have nothing priced in for November. That's correct. I think they're ultimately done. The question really winds up being how much longer we stay at these, what they believe is restricted levels.
It sounds really gloomy, sounds pretty rough, sounds concerning. Azure of Microsoft posted a 29% sales gain in their cloud services business. At a certain point, you take a look at the gloom and the doom, and you take a look at some of the cash producers, and they're minting money. So at a certain point, why are they not the havens?
You know, I believe they still are. You know, we do like those big moats that are ultimately quite defendable. And if you're looking at the return that you get from cash, and you got these companies that can generate the cash and actually return it back however they decide, it's an advantage from a valuation perspective.
So this is a key thing. I get what you're saying, but in this earnings season, we're proving it once again. Then do you less diversify and do you shift from index to more active management?
You know, I think that active managers are going to have their day in the sun. It's been a while.
I'm going to quote you on that. Robert Armstrong was brilliant in the FT yesterday, looking at the recent track record of active management. And you're saying this is the time for active managers to choose correctly.
It matters, and these duration discussions that we're talking about, rather than just nilly-willy going into it based on kind of what an overall market capitalization is allowing you to do, becomes important in my mind.
That's going to be interesting. Marvin Lowe, thank you so much. Greatly appreciate it. I love the phrase, keeping your powder dry. Assistance here, Editor-in-Chief CBE emails in from London, and he says, keep your powder dry, Tom. Come on, know your Cromwell. English Civil War, 1642. Oliver Cromwell, keep your powder dry. It's your English history for this morning.
Slightly different.
Writing it down.
To do, the editor-in-chief said I have to do that. You know, when British history comes into what we're talking about, you
have to talk
Oliver
about
Cromwell,
gunpowder.
What was the other Civil War?
All I can say is you're nailing the keeping your powder dry. How's the triple leverage all cash?
Triple leverage all cash is doing fine here, but this is really important. And Lisa, this goes to the technical construction of the market now. We've had a pullback, price up, yield down. But on a technical basis, there's like zero veracity to it. We need a lot of constructive work here to begin to demonstrate lower yields.
On a technical basis, it's still a ping pong. I mean, basically what you're seeing right now, every day is another ping pong, and you're not sure where it's going to bounce and if it's going to hit a weird corner on the ping pong table, and that's sort of where we are, which goes to Marvin's point. We are sort of getting unanchored in terms of where that yield is, whether it is fundamental or whether, to your point, Katie, it's something about the refinancing. People disagree.
And with the ECB meeting coming up, I think let's go quickly to Marvin Lowe here. Is the ECB unanchored?
No, and it's because their transmission mechanism is clearer than what we're dealing with here. We're seeing these higher yields make their way into their economy. Right now, and Chairman Powell said it last week, based on the evidence, we might not be restrictive. Even though they've been saying that they're restrictive for the, they're getting so restrictive for the last 3 to 6 months.
Marvin, thank you so much. And this goes, Lisa, back to this stunning event of the last 6 days, which is 5% GDP.
Well, the reacceleration, the fastest growth in 2 years in the U.S., which we're expecting to get tomorrow. Yeah, how does that complicate everything?
The narratives of our A block and the 6 o'clock hour really shows the confusion that's out there. We're going to try to give you some clarity here. Importantly, coming up at the 7 o'clock hour, she's from Boston as well, with Marvin Lowe. Katie Kaminsky joins from Alpha Simpla. What is it about Boston today? They doing this just
what happened with the Red Sox? It seems like you're
thank you. Mention it.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Season is here.
Tons going on, lots of earnings.
Beat wherever you look.
Bloomberg breaks the numbers first.
It's a tale of two earnings. Results from Goldman Sachs, Bank of America, and Morgan Stanley.
Netflix is out, guys.
With exclusive expert analysis.
Recovery is underway.
They crushed it. It was one of their best quarters ever.
This is a story all about pricing power.
We're going to make more money. We're going to make more money. And we're going to make more money.
You're making bank. And I think that is what we can take away.
Bloomberg Television and Radio. Context changes everything.
We do not want this war to widen. But if Iran or its proxies attack U.S. personnel anywhere, make no mistake, we will defend our people, we will defend our security, swiftly and decisively.
A tireless Secretary of State, Antony Blinken, they're speaking on maybe the triangulation of Israel, the north, the east, and the south, Gaza Strip, and of course Iran supporting different groups. We welcome all of you to Bloomberg Surveillance. In our first section, we really focused on the bond market, but we Lisa, we have to just admit this story not only will not go away, but I would say develops and increases over the last number of days.
How many different prime ministers, presidents, you name it, have gone to Israel to try to tamp down any potential proliferation? But honestly, what I've just come to terms with is there are different sides and they are screaming at each other. And normally these conversations are held under wraps. The energy, the emotion, the pain that you feel is really palpable.
All within modern media. We welcome all of you. John Farrow on a deserved sojourn. And Catherine Greifeld joins today with Lisa Bramowitz. And I'm Tom Keene. Thank you for joining on radio and television. We need a brief here on where we are and where we are heading to with Israel and Hamas. Leslie Vinja-Murray is definitive at Chatham House, head of U.S. and America's program. Leslie Vinja-Murray, I look at this and I've got 8 ways to go here, but as simple as this, what is your belief that Iran will be drawn into this conflict more directly?
I don't think that Iran has any interest. You know, there are a number of actors that we're concerned about. Iran's certainly right up there at the top of the list. But very few of these actors have any real interest in getting drawn into this conflict. You could say that Iran's benefiting right now. It's seeing, obviously, Israel suffering extreme setbacks, the U.S. being drawn in, and regional support and global support for the Palestinians, and a surprisingly high level of support even for Hamas by some. So I think Iran right now is in a good place, and the U.S. is doing everything it can to deter it getting more engaged.
Dr. Vinja-Murray, not to make it a history lesson, but I was looking at the collapse of the Ottoman Empire, 1915, 1916, and there's Winston Churchill, very young, way before his glory of World War II, and there's Winston Churchill coming up with the conceit that, well, the people that are coming in 1948, those are better quality people than the people that are there, fine, and Churchill's saying that's okay. From that kind of goofy support of years ago is the support for Israel within the Western community, the Chatham House community. Is it drifting away?
I mean, Tom, you put a lot on the table there. First of all, remember, Chatham House doesn't have a singular view on this. Lots of contestation across all communities on how the U.S., how the West, how Europe should engage with the broader question of Israel and Palestine. The U.S. support for Israel is steadfast, as you see, but there is a growing and there has been an enduring support for a two-state solution. But the second thing that you really put on the table is this question of history, and I want to bring our attention to Jake Sullivan's magnificent article published yesterday in Foreign Affairs, where he said, you know, states have many things, but ultimately it's not about history, it's not about power, it's not about assets, it's about the choices you make and how you deploy them. And what we're seeing right now is people are lurching back into historical grievances, when in fact what needs to be done right now is to deal with the context as it is in this particular moment, obviously with sensitivity towards the grievances, but with the recognition that Israel has a right to defend itself, that there is a severe humanitarian crisis in Gaza, and that there is an effort to get humanitarianism in, and most importantly, that the diplomacy that's at work right now is a short-term effort to avoid more people being killed, more civilians being killed, and more states. You know, you've mentioned Iran getting involved. And part of that is by not igniting these deep, entrenched historical grievances that make it very difficult to bring different actors to the table that will need to be at the table, and to prevent people becoming so locked and so entrenched that they only hear half of what anybody says. I mean, we've heard what's happened with the Secretary General. People read the part of a statement they wish to read. They ignore the part that speaks to both sides. And it makes it very, very hard for our diplomats to get this crisis into a landing pattern.
How much has the U.S. lost its leadership role as it has the fourth candidate for Speaker in 3 weeks and doesn't have the capability to vote on a lot of the resolutions that Biden's talked about?
Well, we'll see what happens today, whether there is this, whether Mike Johnson gets that vote, and whether that aid package, that demand that Biden has put forward, that would see aid for Ukraine, for Israel, for the southern border, for many other things, supported. And sure, the rest of the world looks at what's going on in the House and kind of can't believe that this is the United States of America. But I think they also recognize that America has a problem at home, but it has some very serious leadership across all parts of the country, not only in government, also in the private sector. America is the only country, according to the IMF, that has recovered and exceeded its pre-pandemic levels of growth. So I think that there's a recognition that there's a resilience in the U.S. that is not reflected in the House, and that this is something that everybody will be watching as we get closer and closer, not only to the current debacle, but especially to the November 2024 elections.
And Leslie, obviously this is a fluid situation, but one of the many headlines that caught my eye yesterday was S&P coming out and cutting Israel's rating outlook to negative. And part of the reason for doing so is that they currently assume that the conflict will remain centered in Gaza and also last no more than 3 to 6 months. And I'd love to hear from you whether that's a realistic time frame, and also the idea that it'll remain centered in Gaza. How big is the risk of spillover here?
Well, if you take a look at the piece by Dan Byman in Foreign Affairs, it makes it very clear. If this spills over into the West Bank, then we're in trouble. And there is certainly potential for that. And this is, again, where active diplomacy is really the name of the game. We can make predictions 3 to 6 months. I mean, I think that the most significant question is, under what conditions will this run longer than 3 to 6 months? And the condition is if Iran gets involved, if it explodes in the West Bank, and if that makes it much harder for other regional actors in the Gulf to play a positive role in working with the U.S. to bring some sort of peaceful resolution.
And Leslie, I was on a cruise yesterday with John Farrow doing a speech, and on the way back, yes, that's what I read. The Byman article in Foreign Affairs magazine, really extraordinary. Dr. Vinjamuri, thank you so much with Chatham House. I really can't say enough about this, Lisa. I have not read the Jake Sullivan yet. I'll put both of them out here. I believe these are login free from Foreign Affairs because of the moment, but Byman is absolutely definitive on the 3 levels of Palestinian history, Palestinian Authority over to terror groups like Hamas, and it frames out clearer than the emotion we're getting on the day-to-day news.
What Leslie said there, I think, is so important also because everyone's focused on grievances and the history, which is deep and painful, and it's sort of a competition of pain, really, and there's plenty to go around. How do you then come forward? How do you come up with a solution when people aren't ready to come together? I mean, it's a very fraught situation, and all the leaders coming together, not clear that they're having better time trying to resolve it.
And Catherine, I thought your question was great because it goes to this arch fear is that we always go into wars and conflict. This will be short. We'll get this done. This will be done by Christmas, or this will be done by, the start of baseball season, and there's no history of that.
I mean, going off the blueprint of Russia and Ukraine, obviously that war has lasted a lot longer than most people had predicted, certainly Russia. It'll be interesting and important to see whether this actually follows that time frame.
We're going to continue forward here on economics, finance, investment, on our fractured international relations. Futures red and green on the screen. The VIX under 20, though, 19.22. Yes, we will speak of the miracle known as Microsoft. Coming up, Karsten Bresky of ING on the European recession. This is Bloomberg Surveillance.
think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in. We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Bloomberg Surveillance. Good morning from New York. Catherine Greifeld in for Jonathan Farrell, Lisa Bramwitz, and Tom Keener. An eventful day here into an ECB meeting tomorrow. We'll get to that, what it means for Chairman Powell and for the U.S. as well. Just under 5% on the 30-year bond, 4.99. I got a 10-year, 4.86%. We're up 4 basis points, so we come back from the nirvana of the celebration, I should say, of the last 48 hours. Red and green on the equity screen. The VIX 21-22 has come in nicely under 20, 19.17. Looking at Brent crude as a measure of the tension in the Eastern Mediterranean from a 93 level over the last couple of days, 87.99. I guess we'll call that $88 a barrel as well. Because of the importance of our gas, let's dash to it. Under surveillance, Lisa Abramowitz.
Under surveillance today, House Republicans, guess what? They still don't have a speaker. Now the latest is they've nominated Congressman Mike Johnson of Louisiana, their latest choice for a speaker, the 4th in 3 weeks. And Johnson is a vocal ally of former President Trump, saying he's, quote, very confident he will be elected speaker when Republicans hold a vote at noon Eastern. Tom, I got to be honest, at a certain point, when do you just start saying, we can't keep doing this? The 4th speaker in 3 weeks? And can he get even enough support if he is somebody who has worked so closely with Donald Trump and is someone who's alienated a lot of people in Congress?
You see the frustration in the media, a lot of sharp words being said. We're not going to go there. It's not what we do here. But our guests will allow to go there. Greg Villiers to give perspectives here on to be cordial, something original, and many people would say damaging to our relationship with our allies.
Well, to that point, I mean, Katie, this is something you've raised, this issue of the credibility of the U.S. and the ability to keep borrowing at low rates. I mean, how much does this have a market move? How much is that underpinning some of the volatility?
You have to wonder, and I mean, this is an important time. There's real work to get done, of course, when it comes to aid to Israel, Ukraine, et cetera, but also the fact that we're hurtling towards potentially another shutdown in mid-November. This is a pretty serious time.
And the distinction this morning is Villiers, and we'll talk to him later, I believe. Greg's on the schedule, right, guys? Amy, help me here. You know, the interns didn't brief me this morning.
This is how we have meetings.
You know, no, the interns were, you know, they're coming in late, you know, midweek.
At least they're coming in.
Thank you. What are you, HR?
Go on.
But the point is it's drifted over to the Senate. We moved from a House discussion to it affects the Senate. Why don't we continue
so the more
before I lose my
functional side
job?
of things, on the corporate side, Microsoft posting its strongest sales increase in 6 quarters. This was thanks to continuing growth in its cloud computing unit. On the flip side, Alphabet's cloud division falling short of analysts' estimates. The concern here is that the division is growing between Google and its rivals. At a certain point, how much, Katie, are we starting to see in the haves and the have-nots of the cloud division? Or not necessarily a macro story underpinning some of these names.
Can I just say it's so nice that we're talking about the cloud business and not AI, which is, of course, going to be part of the discussion.
You can come back tomorrow.
Okay, great. I already set my alarm.
Along with the interns.
But the fact that you have this pretty binary outcome between what we saw with Microsoft, what we saw with Alphabet, is going to be really interesting to see what Amazon brings to the table on Thursday. Of course, they are the big leader and then some.
And the distinction here, to be quick, is Amazon is co-opting Microsoft knowledge for their processes. They're using, this was announced like 10 days ago. They're using Microsoft within Amazon for their processes.
I also wonder about how much, Google talked about a lack of spending on some of the development within corporations. Is that a Google question, or is that a macroeconomic question?
Not what I heard from Microsoft.
Right, exactly. That's exactly my point. I want to just talk about this story. I thought this was fascinating, sort of a sleeper, but really crucial for the global economy. Chinese property developer Country Garden defaulting on a dollar bond for the first time ever. The firm failing to pay $15.4 million in that dollar bond interest, and now likely headed for what would be one of the nation's biggest ever restructurings. Tom, you've been talking about this, the property crisis in China, and suddenly we're starting to see signs that there might be some kind of response by the government.
What's it like if there's a big enough crisis where the President of the United States wanders down Constitution Avenue and darkens the door of the Eccles building? That happened in the last 48 hours in China. I assume you covered it yesterday when I was coming back from the cruise, but President Xi showing up at PBOC is a bombshell.
For the first time ever.
Yeah, a physical visit. I mean, the symbolic importance of that, it's hard to overstate. But I mean, you think about this steady stream of stimulus we've seen from Beijing, it's still not working its way into the property sector. That is still a big pain point for China.
Well, also the idea that he's willing to let the deficit get deeper and to borrow more, and that this wasn't enough to really generate some sort of rally in markets because people say it's not enough, really highlights the fear of the scope of the problem. And how many people have we heard who say Chinese assets are uninvestable at a time where there is this degree of uncertainty and opacity?
And just an insight here, I noticed Gucci went down because Katie didn't darken the door on Fifth Avenue Gucci enough this sequence, but Hermes just killed it. And they did it in China. I mean, but Hermes, distinctive from the others, said, you know what, China's not so bad. So that's away from the property debate as well. We're going to continue on these many narratives that we've got right now. It's just really, minds. We'll get to the Arizona Diamondbacks here in a moment. Karsten Bresky's looking at me like, Arizona who? Global head of macro research at ING. And what's so important here with his academics out of Germany is public service to the Netherlands of working with their ministry. I want to go all Martin Feldstein on you right now, who used to define the core of Europe. Is Lagarde and the ECB face original structure, original challenges, and politics? Is there still a core of Europe that you've lived?
We still have this core, but the problem is that the core currently would need lower interest rates because the core is Germany. The core is Germany being the segment of Europe, being stuck in stagnation, facing so many structural transitions that actually, if it was for the core, probably we would see lower interest rates.
I did this once for David Folkert's Landau. We were sitting in London, and he said, make me a chart of what Italian lira would be like if there wasn't the euro. And the answer is it wouldn't be, 120, 116, the original number. It'd be like 150, whatever. What euro is most efficacious for Lagarde?
I haven't done the whatever back of the envelope estimations recently, but I think currently we're fine because we do have this extremely weak euro. So this should help a little bit the export sector. The problem is, given that the world has changed so much, given that China is no longer just a nice export destination for Europe, but rather has become a rival, I think the euro matters less for export and therefore for European growth than in the past.
Great. Just another thing to basically add to the laundry list of problems that Christine Lagarde has to deal with and will have to announce and address tomorrow. This is really the conundrum. We saw this with yesterday's data, the PMI data out of Europe. It looks like they're in a recession, and they're likely to experience a recession in the second half of this year. They also are seeing sticky inflation that has multiple drivers. How does the ECB respond? Do they just stay where they are in paralysis, hoping for something to change?
Well, the ECB has been, I think, too optimistic when it comes to the growth outlook. So now when we get GDP data for the third quarter next week, we'll probably indeed see that there is already a contraction. So again, a very mild recession coming in the Eurozone. But this ECB, I think, has, as so many other central banks, they had been so wrong on inflation. They simply cannot afford to be wrong again. So they will have this tightening bias built in, which means no rate hike tomorrow. But there could still be a rate hike before the end of the year. And then we are in this high for longer story.
If you do get oil prices rising, and natural gas for that matter, especially given the increasing ties to Qatar of a lot of European nations at a time where there's increasing unrest in that whole Middle Eastern region, how does the ECB respond? Can they hike rates? They can't really control the price of oil.
I wouldn't do it if I was Christine Lagarde, but this ECB is different. The ECB of Mario Draghi wouldn't do it, but this ECB knows that, well, when you look at their own projections back in September, the ECB projected inflation to come down to 2% only in the third quarter of 2025. With these oil prices, this would be shifted towards probably early 2026. And if you only had one job, and this one job is to bring down inflation to 2%, and then not to 1.9, not 2.2, but 2.0%. I think they will be inclined to at least leave the door open for further rate hikes.
And Carson, when you think about that delicate economic backdrop that Lisa walked through, what is the line between stagnation and stagflation?
Well, you know, we are in a stagflation environment already. So this is a kind of stagnation, whether we see a short contraction or maybe meager growth, but this is stagnation. And the stagnation in the Eurozone will continue. And I disagree with the ECB, which has always predicted that there will be a rebound sometime. But I think we're really in a longer episode of stagnation. And then we have inflation. So it will be coming down in the coming month, but then goes up again on the back of positive and base effects from oil prices. So this is not the 70s, but it is a 2020 stagflation.
And when you think about this bond sell-off that we keep talking about, I will admit I usually talk about just the U.S., but it's been global in nature. It's been in Europe as well. And the narrative stateside has really been that this is doing the Fed's work for them. The Fed speakers have trotted out that narrative as well. Does that logic apply to the ECB?
Definitely it does. Well, the rise in bond yield was not as strong as it was in the U.S. here, but clearly I think, you know, when you look at the models and, you know, how much you give on models these days, but I think it's, you know, a change in bond yields has 4 times the same impact on the economy in Europe as a change in the policy rate. So this would clearly now do the work for the ECB, and that's the tricky thing for any central banker. So having increased rates in the case of the ECB, 450 basis points, more than 1 year, and now it takes another year before we really see the full impact of the rate hikes.
There's probably 10 points in a year where, the show just stops. And one of them was with the former Prime Minister of Italy, Mr. Gentiloni, at the IMF meetings in April, where he just stopped when I asked him about eurosclerosis. There's a conceit right now that Europe has escaped 6 and 8% unemployment, that Europe has gone to some new form of better nominal GDP. Do you buy it?
No. Because we are still back in some kind of new eurosclerosis story. Yes, the labor market is different, but that is thanks to demographic change. This is why unemployment rates are so low, and we haven't seen the same reaction by low growth on the labor market. But when we are a lack of investments, we still have high deficits. The world has changed, which is harmful for an export-oriented economy. So we are still in the middle.
But this is critical. I'm going to pick a year, a 2026 eurosclerosis. Is that feasible? Is that something we should be